Hello, everybody. Welcome to the official Q1 2024 Robinhood earnings stream. This is going to be a fun earnings stream. I'm here with my man, Dave Hansen. Dave, thank you for joining me here and helping me break down earnings. Who are you for those? Yeah, who are you for those who don't know? I got to know a little bit about your past. You have a very exciting career in the investing space. And why are you interested in Robinhood?
Well, I've been investing since I was like in middle school, I think. Chris Camillo and I would sit in the high school library and talk about stocks when everyone else is talking about like sports and stuff. Sitting around reading the newspaper, checking stock quotes. So Chris Camillo has been a lifelong friend, and he co-hosts Dumb Money with me. And so if you're not familiar with Dumb Money Live, that is our semi-weekly podcast on an irregular schedule. So you want to make sure you subscribe, because you never know when we're going to do one. We did one this morning talking about a very interesting stock that we've invested in a lot of times in the past, and we never thought we'd get back into at these levels, but we're back in it. So you're gonna have to watch that to see what that stock is. But I've been investing in kind of startup companies and early stage companies after one of my companies was sold to a publicly traded company that
gave me a little capital to work with. You were an entrepreneur before investor.
I was, yes. I've done a little of everything. For a decade, I was working at Yahoo back when it was the Google of the day. And then that was basically my business school education. Went on to start a software company with my buddies, including Chris Camillo. And we've kind of stuck together as a close-knit group throughout our time. And, we went from being entrepreneurial to being the incubator almost for several startup companies to help these young founders find their way and launch and eventually sell some of their companies. And now I'm mainly invested in publicly traded companies, but if there are certain really interesting opportunities, I'm investing in those as well, like robotics, for example. That's something that I know you're also interested in. But I got invested into Robinhood before it was a publicly traded company. Not super early, not in like the angel or seed investing kind of days, but what are we looking at?
We're just looking at this stock at 1777 here. So you got in when this thing was like $1 or something in the seed?
No, I didn't get in that early. I wish I had. I got in later. I basically in the private market purchased some shares from employees,
right?
Helped them get some liquidity out of their shares that they'd been granted. And so when it went public, I was super excited because that was our big payout. But then, the quick slide down, I'm pretty sure that I lost money. I'd have to check the tax records on that, but I'm pretty sure I did not make money. Robinhood owes me. That's what I like to say. And so I'm trying to get it back now. I'm back invested in Robinhood.
And is it a position where if this thing goes up 15% today, you would smile, or you would be like, it's okay?
So I'm heavily invested in certain stocks. Robinhood is not currently one of them.
Okay.
I'm kind of in the wait and see. I really wish when I first heard that they were coming out with an improved gold program, a gold card, all of these things, I had put two and two together and just said, well, screw it. I need to get into Robinhood heavy because it's had a nice run since then.
Right.
But I didn't do that. I've been kind of just waiting in a wait and see. But I really do think that this quarter we're going to see some very dramatic, and it's already been telegraphed. Everyone kind of knows that we're going to see huge new deposits. But
let's get into that. So what are the metrics you're looking at? I'm going to pull up their February metrics just so we can look at that as well while you're talking. I mean, you're expecting a pretty big quarter. We'll see whatever happens to the stock. The market is the market. But why do you think this is going to be a big quarter?
I think it's a big quarter because Robinhood is back. So, they had their little troubles during the disabling the buy button era, which I was very upset about. I was still, I was a little vocal about that in my on my channel, but didn't think that that was handled appropriately. But honestly, I don't know how they could have handled it. The funding wasn't there. They were not able to maintain liquidity. But we're past that era. We saw this kind of wave from people being angry with Robinhood to good old Americans. We have very short-term memories when it comes to a lot of these things. And when you come out with a better product and keep improving the product, their app has, from day one, been kind of like this amazing new way to even look at investing. It's not. I still use Schwab as my primary broker, but during this most recent promotion of that 3% for your IRA, I am personally now using the Robinhood app, and I prefer it over any of the other brokerage apps that I've ever used. So I think that the interface, the kind of I feel like the momentum is back behind this stock now. And when you come to specific metrics, I don't even know specifically how much of the revenue comes from interest. I know that that's kind of the majority of it, versus transactional. Actually, isn't transactional is like maybe second.
Yep.
But they don't break out the numbers beyond like three categories of like transactional, interest, and other.
Yeah.
And I think other includes all the gold subscriptions and that sort of thing. I would love to see kind of like the inside playbook of where their revenue is actually coming from and what's actually growing. But if we can get all three of those things to have big dramatic jumps up, I think we have a good chance that this stock is going to move today. Of course, we have the SEC kind of
we'll talk about that. We
got a lot to talk about.
Okay, so before we get into specific metrics on the earnings side, and then we'll talk about SEC, I want to ask you this question, because you said something that I think is very controversial, but it is something that I do think is a moat for the company. And I'm curious if you think it's a legit moat. Others have told me it's not a moat at all. You said the user interface and experience of using this platform is beyond anything you've ever used, and it's something you want to keep using. Now, to me, that sounds like something that's going to create engagement, stickiness, increase deposits, etc. But a lot of other people are like, well, that's just like Spotify. Another app could have music, right? Another app could have your brokerage. Is it actually a moat? And is it actually a reason why you think the street can think of Robinhood a bit differently than how sort of other investors think of it as just a little retail trading app?
I think it's a bit of a moat because the other brokerages, even retail, discount brokerages, are behemoth, slow-moving dinosaurs at this point. So if you think back in the early days of investing, I had a guy who I would call on the phone and place a trade that way. And then
You're that old? Really?
Here came, I'm almost 50. Get off my lawn.
You look like you're 33, and I'm not saying that to be nice. I'm really not like
it's good studio lighting. No, I think that that these older companies, like I was with Smith Barney back in the day, and I had a guy I talked to on the phone. When I was able to log into a website and do it myself, or on E-Trade, there was like touch tone trading where you would like have to spell out the name of the ticker, but not having to talk to a person. The technology change made people more actively trading and brought in a whole new audience for trading. And I think Robinhood has done more than any company in history to democratize finance in a way that, literally anybody can download the app the same way they might download a video game and play with it. We saw it in the pandemic and the lockdown when meme stocks were going crazy. That wouldn't have happened if you had to download a hard to use app and there was no fireworks and confetti when you placed a trade. And I just feel like the gamification made it more accessible, and the interface is a moat because I don't see E-Trade or Schwab improving their apps to the point where it makes trading fun. And I know that there's a new version of Robinhood coming out that has tiles and is going to be even a cooler, more customizable user interface. I'm really excited about their product, their packaging, everything about this company I'm a fan of, which as I'm talking now, I'm wondering why I didn't put more money into the company. I might actually do that right now.
Oh, I love it. I love it. So it's so exciting as well, because if you've been around for this long, where you're calling a physical broker to buy some shares, I mean, to me, that speaks volumes to you, who probably people like you get stuck in their ways, right? It's really hard to change brokerages and all this stuff. But if you're seeing the innovation of a product, it has to be that good for someone like yourself that's been through so many brokerages for the past, couple of decades. So
Yeah, and
I
I
agree.
feel like a part of it is also that, when they're a young upstart, and Robinhood's actually kind of maturing as a company, as a platform. When they were brand new, it's like, okay, this is fun to trade on with a little bit of money, but I'm not sure I trust them with a lot of bit of money, right? I don't want to move my whole net worth over to them because they're just a little startup. It's a fun app. It has confetti. So that I think brought in the smaller accounts, the smaller, account size
Right.
customer. But over time, I think that the promotions they've been running with this match, 3% match, 1% on all deposits, that makes people with larger accounts sit back and go, you know what? They've been around. They've been stable. They now have a phone number you can call for customer support. They have, the things that you were kind of hesitant about before, you're less hesitant now. Like I said, I moved my IRA over. I have not moved over my primary investing account, but I'm adding 1% immediately on all of my funds is very tempting, right? And
let's talk about that, because that gold event, I got a chance to actually go to the gold event, and I was sitting front row, and that's the first thing they announced, and my jaw drops. I'm like, I cannot believe you guys are going to give people $10,000 if they put in $1 million, because there's people like you that have been successful in life, that have some millions that they're willing to give if you give them a free 10 grand. Are you scared at all about that strategy? Do you think they can afford to do it? How are you philosophically thinking of them giving this 1%?
I know they can afford to do it because it is purely a marketing expense. It is, if you think of it that way, a cost to acquire a customer. And the higher value the customer, the more you pay for it. It's just it's a 1-to-1, and they can do the math, and they wouldn't have said 1% if that was going to put them in any kind of a bind.
Right. Yeah, I agree. And Vlad himself, I mean, this guy's a math major. I think he's not going to look at the math and be like, oh, the math doesn't make sense. Let's still do it just for the hell of it. And so I think it makes a lot of sense. The Robinhood team does a lot of testing and iterations before they can try to figure out if this can work. So let's get to specific deposits. And
by the way, I'm like you. I saw your interview with Vlad, and great job, by the way. You're nailing it, and that's why I now go to you for my Robinhood info. I still don't understand Palantir, so we
got to change that.
I know it's one of those things that it has to be my kind of stock, but I just can't wrap my head around how big it is and how important it is and how game changing it is. But on the Robinhood side, I could not think of a single question that you didn't ask during that sit down with him. So great job.
Yeah, and I was curious as well. I was like, how do you guys afford this shit? And he was like, well, if you do the math, we get 2% of our revenue yield on our revenue from our assets under custody. So we're giving 1% of that away. We have 1% left. That's how we're profitable. I'm like, oh shit, that makes a fuck ton of sense. It's just a question of, can they keep growing from there?
I mean, and the thing is, when they give that 1%, it is not just a one-time expense. It's an earned. It's basically a vesting period before you get to keep that money, and so you have to maintain an account with them. And so I think they could do more than 1%, but I think that they were, I think 1% is, if you look at promotions that other brokerages do, that is kind of the biggest that I've seen.
Yes.
Occasionally you'll see a brokerage that will have a $10,000, I guess, interest payment if you make a large deposit over a certain amount. But I haven't seen it scale infinitely to no caps, no limits. Whatever you deposit, we're going to match 1%.
I agree. Let's actually talk about because we touched on deposits, and this whole conversation was they're getting more people to put in money into the platform. Let's talk about this credit card. You were one of the first people to get this thing, 3% cash back. You've had a lot of credit cards in your life. Why are you excited about this one?
So on my personal channel, hey there, Dave here, I basically became a credit card channel accidentally. This, by the way, is the gold credit card. It is the first functional credit card. I know you have one that's like a prop. This one is the 10 karat solid gold credit card, and it actually works. I put it in my wallet, and then it got a little scratch on it, and so I got kind of upset. But I'm now keeping it just in the studio. But I don't have enough. I don't have enough zoom reach for you to really see it. You'll have to watch my unboxing video. But
it's a good one. It's a really good one. Yeah.
I'm now carrying the normal version of my wallet and keeping this one here in the studio so I can show it to people. But okay, so I'm a credit card nerd. I'm all about maximizing your cash back for, credit card charges you're going to make anyway, not going into debt to earn points or whatever. But if you're going to spend it anyway, you should maximize your points. And so my goal is 5% cash back on everything. But the hardest part about doing that 5% on everything is there's not a card that does that. So you're doing 5% cash back on your Amazon card for all of your Amazon purchases, and you're doing your American Express Platinum card for all airfare because that gives you 5%. You're doing your Gold Amex card for dining because that will give you 4%. But the biggest spend category is not airfare or dining. The biggest category for me is everything else. And up until now, the highest cash back you could get on a card in that everything else was 2%.
Correct.
There are a couple of like random outliers, like credit unions that have like capped promotions, but on everything else, no caps, no limits, no special conditions, no rotating categories. There is not a credit card that offers more than 2% cash back. And when Robinhood told me that they were going to do 3%, my jaw dropped. And so, I actually became kind of friendly with the folks behind the X1 card back in the day because I referred so many people to that card. Not a sponsored ad, not a paid thing. They just sent me the card early and let me make a video about it. And I sent them so much traffic that when they knew they were going to come out with a Robinhood card, so the Robinhood acquired X1, they contacted me and said, "Hey, we're going to come out with this gold card. Would you be interested in getting one?" I said, "Yeah, of course I would. What makes it special?" And they told me 3% cash back on everything. And I was like, okay, well, you've done it. You're going to be the most successful credit card in the world, right?
Why did that not bankrupt the company? 3%.
Well,
they're going to get 1.5% on interchange, right? So they're going to be losing 1.5% for every transaction.
So the interchange rate varies by card type. So merchants actually pay a higher percentage when you use certain cards over other cards. So when you use your American Express Gold card at a restaurant, they're not getting they're being charged 3%. Sometimes even more, depending on how good of a deal they worked with their merchant processor. So it's not necessarily they're going to lose money on every transaction. I think they'll actually break even on transactions because it is going to be a Visa signature card, and the Visa signature is one of those that has a higher tier interchange rate. But the math behind it has to make sense or they wouldn't do it. And again, I don't have the secret formula for how they're going to pull it off, but if you think of any loss as an advertising expense, and transactional losses are going to be minimized because the interchange rate is going to be maximized, I think that again, you're not going to have a company that loses money, and I don't see this being a temporary, like they're going to say 3% now, and a lot of comments on my video are like, oh yeah, it sounds great now, but they're going to change it to 2% later. I don't see that happening. I see this being a sustainable product because the X1 card was also sustainable, and they were doing 4 times points, 5 times, 10 times points. They had I'm actually, because I referred so many people to them, grandfathered in earning 4 times points, worth a penny a point, so 4% cash back on everything. And so that's why I really haven't fully switched over to using my Robinhood card, because I'm still getting 4% cash back on my X1 card. But again, they wouldn't be offering it if it was completely unsustainable.
Well, it makes a lot of sense. And then I think the marketing, dude, like just the goldness of it.
The fact that, okay, it's a no annual fee card, but in order to get it, you have to subscribe to Robinhood Gold. And what is one of the biggest drivers for Robinhood stock is increasing gold subscriptions. And if that's the only way you can get the card that gives you 3% cash back, when if you spend, what is it, maybe $5,000 a year, you're now have paid for your Robinhood Gold subscription fee just by your cash back, and then you're getting higher cash back than you can get anywhere else. It's kind of a no-brainer, even if you don't use Robinhood as a brokerage. And if you are one of those people who are simply shopping for the best way to get cash back on credit cards, and the only way you can do it is by logging into Robinhood and checking out the account and having an account with them, it makes it really easy to explore and trial the Robinhood brokerage product and crypto product and retirement product and whatever other financial products they start piling on top of that.
It seems like a really big flywheel. It gets you in with a 3% cash back. There's a button on that credit app that showed that if you have $1,000 and 3% cash back rewards, you press one button that gets put into the Robinhood app. And then you get 1% on that. It's just like, it's almost starts to make you wonder, why am I not putting in more money onto this platform that is profitably giving me rewards? And then I'm going to check out all the other products.
Yeah, it makes you want to use it. And the more you engage with the app, the more fun it is. Like, the more I find myself checking, stock charts in their app instead of the default app on Apple, or the Schwab app is just so clunky and gross that I can't even use it. So it's like, I'm just very bullish on the product set with them. And when I see a company that has a product that I use, it's just an indicator that it's a product that I should also be invested in.
And coming from a product guy, you build products, you incubate products. Product is really special to you at the end of the day.
No, absolutely. And the fact that their product is kind of this differentiated product that I was making a video trying to demonstrate how stop limit orders work way back. And so I pulled up the Robinhood app to do it. And in the middle of the video, I'm like, oh, well, they have a way better explanation than whatever nonsense I'm telling you. So I basically just showed that. And it's such a smooth way to educate and allow access to people who ordinarily may have thought that trading is beyond them.
The stock was at 1860 on Monday, and then at 8:43, I remember this because I was about to go live from my morning show. I see this thing drop 10%. SEC says, you know what? Let's stop the party. We're going to sue your ass for having unregistered securities. Here's Vlad's response. Nothing burger or kind of scary?
It's absolutely a nothing burger today. I think that it's going to take a year plus for anything to pan out. You have to remember that the SEC's job is to protect us innocent bystanders who don't understand what a unregistered security might be. But last year, the SEC went after 124 of these defendants. I don't know exactly, but that's the metric that I saw, which is a 50% increase from the year before that. I know that everybody's kind of watching the Coinbase thing, including Robinhood. Robinhood was very early to say, hey, we recognize the risk. We see what our friends over at Coinbase are going through. And so Robinhood took the proactive step of delisting a lot of the cryptocurrencies that were specifically called out in the SEC case against Coinbase. They tried to register with the SEC. They wanted to be considered a special purpose broker for digital assets. That's like a fancy way of saying, hey, just let us do this. Because if you're investing in Ethereum, you're going to find a way to do it, whether it's on our platform or the dark web somewhere. I think it's kind of nothing. I'll be watching it. I think that there is not a company between both Coinbase and Robinhood, both fighting and trying to just give us some rules. Yeah. Dear government, give us some rules. Let us know what it is and isn't, and then we can build our products around whatever you say.
Yeah, but I agree. And the interesting thing is Dan Gallagher, their chief legal guy, he used to work at the SEC, so he understands a little bit about how the SEC.
No, he didn't just work there. He was like the commissioner. He's like the head honcho at the SEC. So he knows the ins and outs. And when they went last year to try to become this special purpose broker, he was the guy like writing the drafts and trying to get it through.
And on top of that, they delisted Solana, dude, and that's one of the top 3 cryptocurrencies on the planet. And Robinhood was so conservative, they're like, we're just not even going to take a chance. They missed out on probably tens of millions of revenue just by not having that on their platform.
And I think that that may be one of the reasons that the SEC didn't get around to the Wells notice until now, because they were like, oh well, they're trying, but you know what? They're still selling this Ethereum stuff, and we don't like the future, so. If it can't go through us, I just think it's kind of nothing for now. It does suck that it happened 2 days before earnings. I wish I had been paying more attention when that stock dropped, because that would have been a great time to jump in with a quick options play, because this is not. It's one of those headlines that is shocking at first, but then when you think about it, it's like, oh, well, we've been warned that we might be sued in the future. And if you think about how trials go, it's going to be a year plus before anything formal actually happens.
I agree. I think it's going to take a lot of time, and the SEC is going to have to put up a really big case. But in the meantime, if people are still trading on Robinhood with crypto, it's going to be pegged a little bit more algorithmically to how Bitcoin moves as well.
And that's the other thing. I think that, the way we see Coinbase trading kind of lockstep with Bitcoin, which the entire crypto market moves with Bitcoin, as does Coinbase. I feel like Robinhood is tied to the entire stock market. So you have to have a weighted average of both stocks and crypto to figure out the directionality of Robinhood.
So we have 2 minutes until earnings. Dave, you've tuned into a bunch of my streams as we get into the final seconds. So I'm gonna have a bit of emotions. We ring the bell at 4 p.m. I know you've been through this game for decades, but are you a little nervous, little butterflies in your stomach at all?
No, I mean, this isn't going to affect my life one way or another. I'm more of a cheerleader when it goes up, and this might be a buying opportunity if it goes down. I hate to say for all of the Robinhood investors, but if we got a little bit of a sell-off, this is a buying opportunity, dude. This is not something to cry over. If we got a sell-off, and we've been like this whole earnings cycle, like Meta blows out earnings and then says, well, we're going to have to spend on AI, and it drops through the floor, and Tesla misses across the board, but Elon says, hey, you know what? I've got some ideas for the future, y'all. And it takes off. So whether, it's almost like whether the numbers are good or bad, we know they're going to be good. Is it good enough for whatever the market thinks? Who knows? But if it sells off, if it goes up, I'm happy because my existing stock is worth more. If it goes down, it makes me really want to push that buy button, or swipe the buy button, I guess, because I'll be doing it in Robinhood.
I love it.
By the way, I did put all of the money that Robinhood gave me for moving my IRA over, I put into Robinhood stock.
Into Robinhood stock. All right, here we go. We are here for the next roller coaster for the next hour. We'll get some results. Maybe comes out at 4:05. I think the stock will move at 4 p.m. because this one tends to move as soon as it hits 4 p.m., either to the upside or the downside, and we'll see what happens. Ladies and gentlemen, thank you for being here with me and Dave Hansen. Wednesday, May 8th, Robinhood Q1 2024 earnings. The stock market is now closed. All right, Dave.
Partially inspired by your bell ringing, and I'm glad you brought it with you on vacation or wherever you are. I have an alarm that goes off and plays the stock market bell on my phone in the morning and in the evening.
Okay, I'm so happy I influenced you to wake up like this nowadays. This is great.
I love it.
All right, so I'm refreshing the screen. We'll see what happens. Last time, I think it moved 12% after hours and then proceeded to rally through the coming days. If this thing went down, I wouldn't be surprised if it went up. I wouldn't be surprised. The street has been a bit reactionary towards initial numbers to the upside or the downside, but now we just need to get those numbers and see what happens. All right, no numbers yet. Up about 0.56%. Let's pull up the press releases as well. Still not there, and then we'll go to Twitter as well.
It's going up in aftermarket, so we're up 1.8.
All right, there we go. 1.68. Stocks at 1816. It's up 1%. See, the thing is, it's gone. So many stocks have gone up this season, and then they go right back down as soon as they go up, and then right up and then right down. And it's very interesting how the market kind of interprets it.
Yeah, you never know what that first move is actually indicative of.
Correct. And we also have ARM, just to check on ARM real quick. ARM is up a little bit after hours. Duolingo is today. They are flat. And then Airbnb, they are basically flat. All right. So Robin is the only one that's up about 1%. Still waiting for numbers, guys. As soon as it comes out, we will know. And we will let you see what we have.
This is the most boring part of these live streams, because we now are in like this. Okay, we built up all this hype, but now we're just waiting for the press release to drop.
Literally waiting for it. It's a lot of it's just a lot of you're just waiting. You're trying to see, and for some reason we're in this world where numbers don't come out at 4 p.m. even though.
So I'm curious, are you you don't have a Bloomberg terminal or anything, do you?
I do not. So I don't have 25 grand a year yet to pay for it. Eventually we will. But yeah, not the terminal. Yeah, Twitter honestly works great. I mean, as soon as there's so many accounts that
it does it. You have a few accounts that you just put into a group, and you know that someone's going to drop the numbers as soon as they come out.
Yeah, you know it's going to be big. KBW has a $20 price target on Robinhood. They said the SEC notice is not a big deal, so you know the institutional analysts are just like, it's not that serious. Just for those who wanted to get that perspective. And then honestly, the price target on the street is pretty average, around $22, $23. Bernstein has the $30 range. The other guys are in the mid-20s. So one could argue it is undervalued from an institutional perspective, how they're looking at where the stock could go.
What is it? I don't put a price target on things. For you, I think this morning you said 25.
Yeah, I think 25. I think market cap would be 24 billion at that range. Enterprise value would be 20 billion. Company should be going around 40% year over year at that point. I mean, the deposits should be close to a couple $10 billion quarters, $9 billion quarters. It should be pretty intense. And I think 25 is very generous, to be honest. I think it's like, very conservative is what I'm trying to say. So we'll see. ARM is down 4%. This one was at 100 last week, so this move is not that crazy right now. Airbnb is up 5%, 166. They're gapping up. Market seems to like some of their results. Robinhood's still flat.
They still have not dropped the number. We do know that the implied one-day move on Robinhood is 12.3%, that their expected revenue of $548 million would be a 24% gain. Their adjusted earnings would be 6 cents expectations, at least according to the source I'm checking.
Yep, you are correct.
And we're hitting refresh.
And we're
going to get this for you as fast as we can.
Dave, what do you think about Vlad as a leader?
I think he's fantastic. I know that he got a little bit of a black eye during the disabling of the buy button, and I was personally very upset with him at that point. But I mean, I think he came up with this crazy idea of we can undercut the big boys with this crazy trading platform that he wrote in his dorm room or something like that, right? He figured out how to do this automated trading faster and cheaper than anyone else, and was like, well, why don't we just move this to retail? I think he's brilliant. I think that the product suite that they've put together has really just kind of it's been a differentiator in the market.
We got a green candle, Dave. We got a green candle. We'll see if that green candle keeps going higher. We're at 19 after hours, up 7.5, up 8%. We'll see if the green candle keeps going. 1930. Let's see. So the numbers obviously came out. The street must be liking the initial numbers. These are algorithms right now that are probably getting beats across the board. That's why they are having the stock go higher. I'm pulling up the numbers. Still don't have it yet, but the terminal does have it. Up 8.2, up 7.4. Its initial good reaction, I would be as soon if it goes right back down to up 1%, that means there's some numbers that the algorithms are just dissecting via their AI that lets them know that it's not as good as what they thought. We're seeing it now up 5%. And let's see, assets under custody, 130. All right, we got someone in the chat with that data. I'm trying to get the numbers, guys. Don't fully have it yet, but if you guys have anything, put it in the chat. That's a big increase. That it was, I think, at 115 last quarter, something like that. Twitter should be having it. Oh, here we go. Wow, here we go. Revenue. Oh my God, Dave.
What are we looking?
Oh my God. 618 million of revenue. Oh my
618. God. That is a huge beat.
Oh my goodness. EPS of 18 cents a share.
What?
Are you fucking kidding me?
And we're getting a red candle on that? What did the AI find later in the comments?
Yeah, like let's forget the red candle is the red candle, and we'll go back to that.
I think the green candle is the number that we're just like, oh my godding, and the red candle might be something else.
Red candle might be something else. Oh my goodness. Not in my, I did a very big bull case, long Twitter post. I had 580. Maybe if we're lucky, that would be the bull case. That's a 50% beat on EPS. Oh my God. Stock right now is barely up. Stock is the stock. Now it's red. That's a big beat. I'm trying to get the numbers, guys. And again, this, I know it might suck to see the stock action, but this is this earnings season. If you're investors in the company, these numbers should pleasantly be surprising to you. The stock is the stock, and we really can't control that. Maybe the guidance got hit. Something's got to be there that the street's hating. I still don't have the number. Oh, here we go. I got it, folks. We are live. It's time to dig into the numbers. Here we go. Thank you, everybody, for being here. Robinhood Q1 2024, 40% year over year revenue growth. The street thought we might get 24%. Wow. Net deposits, 11.2 billion. Oh my goodness. My bull case was maybe 10 billion if we get, another $3 billion quarter. That's up a lot year over year. Gold subs, I said this morning on Twitter, I think we would get to 1.6 million. That's up 42% year over year. If I'm not wrong, that's up a couple 100,000 quarter over quarter. Vlad Tenev, CEO, we continue to aggressively execute on our product roadmap in Q1, leading to all-time highs for net deposits and gold subscribers. Q2 is off to a strong start, with April being our highest month of the year for net deposits and gold subscriber growth. So this doesn't look like it's a one-off yet. And we're excited to see strong interest with over 1 million customers in our Robinhood Gold card. CFO, we delivered significant revenue growth and margin expansion in Q1 as we remain focused for driving another year of profitable growth. In Q1, we set records for quarterly revenues, net incomes, EPS as we stepped up our marketing and growth investments. Dave, initial reaction before I keep going.
I mean, this is like what we would have called better than best case scenario on any numbers that we were looking at. And I am not surprised at all that their April was their biggest month yet, because it's tax season. It's the time when people are looking at their IRAs, and when you have 3%, I had friends texting me, "Hey, is what's up with this? Should I be putting my money into Robinhood? Is it safe?" Yeah.
This is
my phone's blowing up now.
I mean, I think we'll see what caps to the stock, but I mean, if we could forget about the stock for a second, this is insane. The stock will eventually reflect these numbers, because sometimes you're so good, you're undeniable, and that's how you become great. And this is a fucking undeniable quarter. Congratulations to Vlad and the team. This is absolutely exceptional. Total net revenues increased 40% year over year to 618 million. Transaction-based revenues, 59% year over year, 329 million. I thought they might do like 270 on that. Primarily driven by crypto. Wow, they did 126 million in crypto. That's why Dan Gallagher is not going to let the SEC get rid of crypto. Guys, my bull case was 75 million on crypto. It was 75 million. They did 126 million. Robinhood is becoming a leading crypto brokerage platform. Options revenue of 154 million, and then equities revenue of 39 million, up 44%. Options up 16%. Net interest revenue increased 22% year over year, 254. That's incredible as well, driven by growth in interest earning assets and higher short-term interest rates. Other revenues, 35% year over year. 35 million is relatively small, but 35% year over year growth is incredible, primarily driven by higher growth subscription revenue. I think net interest revenue was 230 last quarter as well. This one's at 250 this quarter. Net income, wow, 157 million. Dude, hold on. They did 618 in revenue, 157 divided by 618. They have a 25% net income margin on their revenue. Like this, I did not in my wildest dreams. They did 30 million, to give you guys some context last quarter, what they did for net income. Operating expenses decreased 56% year over year. So that's how they're likely doing this to be in a profitable way, right? They're decreasing their expenses. Assets under custody, 65% year over year, 129 billion. Net deposits, 11.2 billion. That's up 44% year over year. Over the past 12 months, net deposits were 23 billion. Average revenue per user is 104. That was $80 last quarter, 84. That's 104. Gold subscribers increased by 500,000. My bull case was 375. So they beat my expectations by 125,000. Or 42% year over year. And cash and cash equivalents is 4.7 versus 5.5. So there you go. You have an 800 million decrease in cash and cash equivalents. That's probably why the net interest revenue is not as high as the transaction revenue. But obviously that 800 million went into getting all these customers, and those customers will fuel deposits over the long term.
Marketing cost, marketing expense.
Marketing expense.
Monthly active users increased 16% year over year.
Okay, let me pull up the deck. Oh, here we go. We got the deck. We got some visuals now, Dave. Got some visuals, I believe. Yep. And we'll go there. Dave, where's the stock at? If you could check that.
Yeah. Keep a live look at the stock here. We are 1891. Okay. Up 5.94 after hours.
I don't think that's crazy. Yet, but this is a crazy quarter. Okay, so, all right, here we go. I was looking at the wrong one. Q1 2024, here's what we got. Let me know what you guys are thinking in the chat. I mean, these are pretty big numbers, dude. 500,000 new accounts, 23.9 million users, 260,000 gold subscribers, quarter over quarter, 500,000 year over year, 130 billion under custody. So last quarter they had 103, so that's up 27 billion. And then net deposits again. Look at this chart, guys. I mean,
wow. Yeah. That was in their last quarter's report. And, you see this gradual bump up and down. That is a substantial increase.
I just, again, the street has to be looking at this and at some point realize this is not a meme stock trading app anymore. This is a big company becoming a very big business. Net revenue, 618 million. Adjusted EBITDA, 247. Net income, again, 30 to 157. That's incredible right there. And then adjusted operating expenses. Now, one thing I will say is this net income increase, I think crypto was one of the key catalysts for that, right? They did 125 million revenue off that. If Bitcoin goes to 30K next quarter, then yeah, this might look super lopsided going into Q2. I'm pretty sure Dave also think crypto's, Bitcoin's probably not going that low. So as long as that kind of stays stable, that should be all right as well.
And also you have to think about the valuations of crypto up during the quarter too. So we've had a pullback since then, but during the quarter that we're looking at, crypto was higher and equities were higher.
Correct. And that definitely helped assets under custodies as well. Okay, so in January, they added the spot Bitcoin ETFs. February, they did a MetaMask integration. They also did 24-hour market, Robinhood retirement for independent workers, Gold app, Android users, UK, Robinhood wallet. So this is just showing what they did throughout the year. What they want to do, still, we're waiting for advanced web options so people can trade online. Futures trading in index options. And then credit card is out, gold and retirement accounts, UK brokerage, EU crypto, expanded product suite. So this is kind of what they're looking at for the next 8 months of this year. 23.9 million, 810,000 new users. It's really hard to get users on a fintech, and they got 810,000 of them. Assets under custody, again, 130 billion. So if we look at the makeup, 82 million of this is in equities, or 82 billion, 26 billion cryptocurrencies, and 21 billion in options. 1 billion held in net cash. Retirement growth. Okay.
Look at this retirement AUC per account. Look at that.
Wow. Look at that.
From 3.5 to 6.5.
That doubled. That's close to double. Wow. So 650,000 retirement accounts, 4.2 billion. That was in Q1. Vlad did tweet that they're now at 6 billion. So they're 2 billion above that already. And then the average person at 3.5 thousand, now they have 6.5 thousand. And that's going to grow over time. And you're not going to take that money out because it's your retirement. You're just going to leave it there. Okay, gold. This is a big slide. We continue to add value to Robinhood Gold. In Q1 2024, subscriber growth was the highest in 3 years. Gold subscribers receive meaningful value for $5 a month. Again, it's just fucking insane. $5 a month, and you get this stuff. Compared to our average funded customer, our average gold subscriber has 5x the retirement adoption rate, 2x net deposit. This right here, this is the one thing you need to understand if you're a Robinhood investor. If they get you on gold, You're going to put more money into their platform. They're going to make more yield on that money. They're going to be able to keep getting this flywheel to go. That's why they care so much about gold. And then you have 8x assets under custody if you're a gold subscriber as well. 1.68 million. Any thoughts, Dave, on this slide right here in terms of the gold growth that we're seeing?
I mean, it actually doesn't surprise me at all because their gold product has gotten so good. Their better margin rates, 8%, that is almost as good as the negotiated rates that I have at a multi-million-dollar brokerage account, right? And to get 8% is a fantastic rate. To get the 3% match on the IRA, this is such a good product that it doesn't surprise me at all that this was their biggest subscriber growth in 3 years at all. And you know, if you think back to when 3 years ago, that was when meme stocks were going and people were going crazy, right? So,
yeah, I agree. I mean, these numbers I'm kind of looking at them and I just don't believe them. They're pretty damn insane.
Look at the next slide. The net deposits, a record 11.2 billion in Q1, translating to 44% annualized growth rate and contributing to 30% growth rate over the last 12 months. I mean, that is just, you couldn't have like predicted that you'd be able to draw a chart like that and be taken seriously.
You couldn't. And dude, I literally, I think last night or the night before, I've gone through their Q4 numbers, their monthly numbers, at least like 50 times. Like I really try to understand their numbers.
You're way nerdier than I am when it comes to this stuff.
I'm so nerd. That's why the first 30 minutes.
And that's why I love watching, because you will summarize this stuff down to like a digestible chunk that I don't want to read their thing 50 times. I want to glance over it once when it first comes out.
Yeah, I was reading it 50 times and I'm like trying to understand this thing. And in my wildest dreams, I was like, no, I'm being too optimistic. I don't want to do that, right? Because then you give audience a bad expectation and stuff. I didn't expect that. And the key thing here is now, is this sustainable? April so far has gone well. Even if next quarter is 9 billion or 10 billion, you're already up more than 100% from the previous 10 quarters. So if there's a slight decline, I don't think that's crazy. If there's a slight tick upwards and they go to 12 billion or they just stay at 11.2, 11.1, I mean, this can get really, really exciting for Robinhood. Net deposits were broad and diversified. So length of the customer relationship, if they had you for over 1 year, 75% of those new deposits came in, less than 1 year, 25%. Sources, 25% came from other brokerages, so Schwab, Fidelity. 75% came from people like me that just keep putting it in because I've consistently used the app. Uses, 20% is in retirement, 25% is cash sweep. That's the people that are getting like 5% APY from Robinhood. And then 55% are just leaving it in their brokerage in general. Okay, this is a big slide as well. This was last quarter. I thought this was a great slide. Average cumulative net deposits tend to grow over time across our funded customer cohorts, and recent cohorts' initial net deposits are larger. So they're basically saying, hey, the groups of people we get, they stay for longer and they put more money in. Dave, any thoughts on this one?
I'm trying to figure out what this chart looks like. This looks like you're trying to predict the direction of a hurricane. So the darker the line, the more recent the data. Okay, that makes sense to me. And we see that they're moving up and to the right faster up more recently. Okay, it makes more sense to me now. But yeah,
if you look at the lightest color green, that's Q1 2020. And they have been around for 16 quarters now. So their average deposits, I think, is closer to around 7,000. But if you look at these green lines that just came in, they're growing way quicker in terms of their velocity to the light green line, because
they're starting higher and accelerating faster.
Correct.
So you're doing exactly what I was saying, getting these larger accounts to finally move their money over. And as that happens, that money just explodes that much faster.
And that creates the ability for Robinhood to just keep making more income off these customers and eventually get them to trade and use the platform and try out retirement, things of that nature. Net revenue, again, dude, 618. When I saw that number, someone put it in the chat. I did not think 618. I said 580 was my bull case. ARPU was 104, 618, 254 in crypto, 254 in interest, 329 in transactions, and then 35 in gold. Also, they have a media company now that's probably contributing, and the credit card as well. Okay, so these are some good detailed slides. I always love these slides. So Dave, you were asking to like kind of see the nitty gritty. These are really good ones. So transaction-based revenues were up 60%, 329. 10 million they got from other transactions. That's the cash card. There's a Robinhood debit card and instant withdrawals if you want your money quickly. So that stayed pretty stable. 126 million from crypto. That's a big deal. 154 from options. That's big. And then equities is up 14 million. That's big as well. 39 million there. Now, this is the big one. This is the one I look at. Interest revenues. Okay, so let's look at this step by step. There's a lot of ways they generate interest. So they did 254, 236 last quarter. 6 million, this is the smallest line, was from the credit card. The past 2 quarters, they only did 4 and 5 million. So they saw a 1 million increase, I think a 25% increase just in the credit card alone. And that should grow higher and higher as the credit card is rolled out, because it's
Now,
barely
I don't really understand that, because it looks like they're showing that credit card line for the past 3 quarters, but they really haven't had a credit card product. Is that just me? I'm the only. Am I the only one?
So they bought X1 in Q3.
Oh yeah, that's X1 revenue. Okay,
Correct. Yep.
makes sense.
And so X1 was generating them a couple million here and there. And now I think we should start to see that scale. Securities lending revenue, they made 15 million. That's like loaning out your stock for short sales. Cash sweep, 39 million. Makes sense. This is not growing that much because they gave out a lot of money, but it still grew $2 million. 58 million on interest on their cash. That's up 4 million. 72 million on margin interest. People are trading more, so they're paying more to Robinhood to borrow cash. And then 70 million interest on corporate cash. So pretty good quarter. They beat from the last quarter, and credit card is up, and margin interest makes up the bulk of the increase on net interest. And then here's the thing, Dave, as well. People are so concerned about, when is the Fed going to cut and to get stocks to go higher. I think Robinhood's in a perfect position. If they don't cut, Robinhood can keep printing juicy net interest income because they've got this 5% APY. If they do cut, then equities go up, and then Robinhood benefits from that as well.
Yeah, I think they benefit more when equities go up, but
Correct.
You're absolutely right that dark green section will increase faster as people move their money over into cash product.
Right. And a lot of people thought Robinhood wouldn't survive. They were a zero interest rate phenomena. And it turned out they're a 5% interest rate phenomena right now. And as the interest rates go down, that should only be beneficial for them over the long term. Adjusted operating expenses up 13%. That's fine. Diluted share count decreased by 5% year over year. We continue to anticipate dilution of 2% or less. A lot of people called them stupid for buying back 55 million of the FTX shares from Fidelity at $11. They're up almost 100%, it seems like, on those shares. The stock, 1887, up 5.7% right now as well. Okay, adjusted expenses. This is the same slide as last time. Nothing crazy there. GAAP net income, 157. Again, that's a big beat. That's why we saw the stock surge as soon as the numbers came out. And they have about 5.2 billion in corporate cash. So they have 4.7 billion in actual cash, and then they have another 500 million in credit lines. Okay, so about 5.2 billion. Here we go in their actual corporate cash. Raw reactions, Dave. What do you think?
I mean, I think that this stock needs to keep going higher. I mean, I should have instead of talking to you, been placing an options trade to buy the shares, because it's now up 5.8% in after hours.
This thing should be up, quite frankly, like 30% or something. It should be
well,
up.
And that's what I'm wondering. We saw that red candle. Who knows what the bigger institutions, the bigger buyers are doing, because this is such a widely followed stock for small investors, but they don't move the stock as much as what the hedge funds and the big boys are doing. So I'm kind of surprised it's not up more, but like I said, we saw Meta drop 30% on good earnings. So it's hard to really know what's going on.
So I have a good friend of mine, Sam. He runs a little fund called Kurtosis Capital. He's been tweeting that he just does not get Robinhood's valuation, loves the company, just doesn't get the valuation. I've been obviously tweeting the opposite of his perspective. He says, look, this is a $30 stock to me now, Mitt. I concede, buddy. I bought 1,000 shares after the close. There we go. I'm just playing around. But I think Sam is an example of what a lot of institutions tomorrow might feel as well.
Yeah, it really is kind of like one of those moments. If I were Mr. Charles Schwab right now, I'd be a little bit nervous, because my customers are exploring other options, and when you have a platform that is willing to pay you so much just to come over, and that the experience once you're there is an improved experience, it doesn't seem as like old school spreadsheet style. Like if you're an old person, but I mean, I'm an old person and I love it.
Guys, we have to go on 30 minutes. I want to go through a couple things. Let me get CNBC's reaction, and then we'll keep going from there.
The other online brokerages, it sounds like some pretty strong numbers there.
Yeah, I understand why they emphasize that, but these are tiny numbers relative to the size of the rest of the industry. I know that they want to sort of say we're not just a trading app, and that is showing that it is the case. I'm much more interested in the upside and average revenue per user at over $100. This year was at 103. I mean, even by the end of the year, it wasn't supposed to be any higher than like 98 in terms of average revenue per user annually. So that shows you active trading in all the areas that they benefit from, like crypto and options, especially, obviously driving things on that front. So, yep, they're on this path to becoming more diversified, but I don't think Schwab's sitting there saying, "Oh no, Robinhood got $11 billion in the quarter." It's still very small average account size at Robinhood as well. So they have some work to do on that side. But in the meantime, I mean, this quarter estimate started at 1 cent December 31st, and they came in at 18. So clearly they have momentum.
Airbnb, meantime, down 7% right now in overtime.
So he just said the exact opposite of what you said. So how do you feel that the suit said
so
Dave
he wants to know what average revenue per user was, and he hadn't yet reviewed the numbers himself because he's on TV instead of looking at spreadsheets like us. But I see that the average revenue per user is $104, and last quarter it was $81, and the quarter before that was $80. So I see a giant jump. Last year the average was 77.84. It was like 80, 81 maybe. And it's $104 per user now. So I don't know what Charles Schwab's revenue per user is, but I see that it's an improvement for Robinhood, a pretty dramatic improvement. It's page 14.
Page 14. Okay, perfect. Yeah, and look, the thing is, Charles Schwab's is probably higher than 104, but so is their market cap. I mean, they're at a $130 billion market cap. You know, Robinhood's at a measly 15 billion, 18 billion. You take away their cash, they're at 12 billion. So the opportunity presents itself, even if the growth is not as big as Schwab. I think that's what a lot of the suits kind of miss about the story is like, it's not a company that's worth 70 billion like it was, or 50 billion in IPO. That was ridiculous. I mean, it should not have been a $38 stock at that time, ran to $70, but now it's an $18 stock. That was $8 90 days ago, right?
Yeah. I'm trying to figure out what Schwab's revenue per user was if they report that.
Okay, while Dave's doing that, let me show you guys these slides at the bottom, guys. Thank you, everybody, for being here. Really, really appreciate it. Farzad, Adam, this is a big win for the community. I know a lot of people follow me as well, and whether I like it or not, I got you guys all into this damn stock because I kept talking about it. Michael Wilder, thank you, Vlad. Love you, Michael. Thank you for being here in the chat as well. Yeah, thank you, Vlad. I mean, these are some big, big boy numbers, and the stock is the stock, but at some level, the market's not rewarding froth, and they're not rewarding measly beats. I don't think Robinhood's frothy, and I don't think this is a measly beat, but the market might still be a bit irrational, and so we'll see how that plays out. March deposit. So I want to look at this. So in March, they added 300,000 accounts because we didn't get the March metrics before. Cash sweep went to 19 billion, so it's up $1 billion. Assets under custody went from 118 to 129, so they added like 10 billion. And the net deposits, 3.8 billion in March itself. So that was great. Now, this is the crazy thing, Dave. I didn't expect this. $23.6 billion of crypto volumes in March compared to February, that was 6. This is why they're not going to let the SEC get rid of crypto.
No, they had to split the bar in half so that you could read the other numbers. Look at
that. You know what's crazy about this as well? Coinbase. Wow. So I did not think, I saw Coinbase's Q1 numbers and their retail trading volumes, they were only 58 billion. And that's a big drop off. In Q1 2021, it was 170 billion. So it's not even half of what they had in Q1. I did not think, I made a tweet about this. I said, maybe the street tanked Coinbase on those numbers. Maybe the street's thinking, hey, they're losing share to someone else. Robinhood just did half of what Coinbase did.
That's an interesting observation there, because that was a time period we're looking at that everybody was looking at crypto again. We went through this little crypto winter when nobody was paying attention, and then it starts getting hyped up again, and so it had more trades. I can see why Robinhood did more, but for them to be able to do half the volume of or half the I guess notational volume of Coinbase, that's pretty impressive. And for those of you who I saw in the comments saying that, oh, don't kid yourself, Schwab's not going anywhere. Of course Schwab's not going anywhere. My point is Schwab doesn't have a lot of places to get new money from. Robinhood has a lot of new money that they can just gobble up, right? And so as these account owners at Schwab and other brokerages start to kind of look at their options and say, hey, would it make sense for me to take a $100,000 paycheck for just pushing one button and moving my brokerage account over? Yeah, maybe as long as you're not invested in weird things like mutual funds that Robinhood doesn't support. But why would you be in a mutual fund anyway if you're an active trader? And why wouldn't you just use an ETF?
That's a
That's my point.
point.
That Robinhood has a lot of places to pull new money from. We should continue to see Robinhood increase their new net deposits, their new user counts over time, where I really don't see Schwab as they'll grow their assets under management just because people's accounts keep getting bigger. I don't see them getting as many new signups. I see it probably we'll see them maybe not going net negative, but the rate of opening new accounts, I think, will slow.
Yeah, and I think the point you made about where does Schwab get the money from, this is the point Vlad made with me on the internet, on the video, the interview. I was just like, well, so why do you guys think you can compete with Schwab? And he was like, well, they can't give 1% to $7 trillion in assets. We can because we only have 100 billion.
And they can't be nimble about things. They can't pivot their entire operating costs because they wanted to run a little promotion. They just can't do that. They have freaking real estate down the block from me, and when I needed some paperwork, instead of just emailing it to me, I had a guy hand deliver it to me, which is fantastic service. I love my guy at Schwab who's willing to hand deliver a document to me that I needed, but I would have been fine with an email. And I don't know that if they're going to pay me $100,000 and the upside is you get to have a guy who you talk to in person at his desk and he'll take you to lunch versus I'll give you $100,000 in cash. It's going to be hard for large accounts to continue to justify doing it the old school way.
Dude, I agree with you. These results are just, it's not easy. The only bear case I'm looking at right now, the stock is the stock. I know people want it to be up 20, 30% right now. The fact that it's green, given how some of these earnings have went, I think is a positive. And I think, again, if the numbers are undeniable, the street catches up. That always ends up happening. The way I think Robinhood tanks the bed the rest of the year is if the market tanks the bed, which is a real possibility.
Yeah,
but
both equity and crypto markets. If either of those have weakness, Robinhood's going to have weakness. Schwab's going to have, everybody does poorly if your revenue is tied to people having money becoming worth more.
Right. So if you are a general bull on 2024, then I think being bullish on Robinhood is not crazy. If you think there's a big recession coming up very soon, then yeah, maybe Robinhood's not the one to invest in. And that comes down to how you think about it. So look at this, Dave. This is incredible. Trading volume in Q1. I'm going to say this very slowly so people get the point. Trading volume in Q1 of 2024 for Coinbase was $56 billion. For Robinhood in the month of March, not the quarter, the month of March, it was half of that. In the quarter, it was 23 plus 6 plus 5, 12 plus 23. That's what, 35? They did over 50% of Coinbase's entire Q1.
Wow.
And Robinhood has done most of Coinbase's money, as you can see, is the second part, institutional, $256 billion. That's all the Bitcoin ETFs. Robinhood doesn't have BlackRock using them as a platform. So that's weird to me because I thought it would be not that number. I thought people would trade. Bitcoin went to 70K. I get it. But when Bitcoin went to 73K, it seems like everyone flocked to fucking Robinhood to buy their Bitcoin and their Ethereum. And maybe it's because the Coinbase fees are getting ridiculous. Like, it has to be something that's compelling people.
If you have done it once before and you start to see, oh wait, these fees, that's not something I had thought about. But yeah, the fees actually might have been a driver because you pay less on Robinhood to buy Bitcoin. Is it free? I can't remember. So you basically are just paying a little spread or something.
It's 0.35 cents. Yeah, that's it. And crypto. I mean, Bitcoin.
And it's clear when you're making the trade. And I feel like when I've traded on Coinbase, you not only are paying a spread, but you're also paying hundreds, if not thousands of dollars in a line item called fee, right?
Correct. And so, Coinbase Coinbase charged me money to literally move the crypto off of Coinbase into my bank account. I mean, it not in Express, not in 20 minutes, but over 3 days. Like, I mean, it's just the fees are ridiculous. And I guess that actually hit consumers in their pockets and they're like, fuck this. Now, one of the things about Robinhood on crypto is their spread is not that good on Bitcoin, right? Like you'll put in an order and it'll give you hundreds of dollars above the average price that Bitcoin's trading at. But to solve that, you just put in a limit order.
Put a limit. Yeah.
Yeah. And so to me, maybe it's not the hard custody that Coinbase is, which I'll give them that. Coinbase is an exceptional crypto product. But at the end of the day, consumers care about fees. And that's what Robinhood's benefiting off of. Okay, so let's see what else we got here in this deck. Margin, yeah, that's up 4.1 billion. So people are paying Robinhood more money to borrow money. And then options contracts, that's down slightly month over month, but it's up a ton quarter over quarter, 18% year over year for the options. Dave, are you an options guy or do you just buy and hold?
I have been an options guy, and at various stages of my life, I've used options for different things. I used to be a complete lunatic when it came to buying short duration, barely in the money kind of options as a speculative trade. I don't do that much anymore now. It's more I use it more as a hedging tool, as a way to pause my net worth in a market free fall, that sort of thing.
Got it. So you're not
without having to sell everything. I can buy some puts on the SPX or something. And
when you do options, do you ever try to go for like leaps and say, hey, I think Robin is going to be $30 by January 2026?
I haven't done much of that because my philosophy is you're paying the premium, and that premium has been calculated by people way smarter than me by the entire market. Okay. And so the premium you're paying probably, statistically should be the exact equal amount to where the stock's going to be. Right. So I have not done that just because, much like if I didn't have to have insurance, I wouldn't have insurance. Right. Because it's wasted, thrown away money. And so the idea of leaps to me is it's just not a strategy that I've gone after. I've thought about it. I've modeled a few plays, but it's just not something that I've done. Is it something you do?
I'm more to the leaps game. I think one of the things about leaps is, as you said, the market makers are much smarter than both of us. The one thing is they're very smart on the weeklies, the monthlies, and even maybe 3 months out. They're really stupid on the 2 years out. And there's not a lot of volume or open interest for them to figure out what is the effective price. And that's where I think there's a lot of alpha to get. Yeah. And everyone knows in the chat, I do have a pretty big leap position on Robinhood. So we'll see how it plays out. But there are obviously the options, notional trading volume on Robinhood is pretty exceptional. MAU, 13.7 million. They got hit badly a couple quarters ago because their MAUs kept declining. They're up 2 million year over year. It's up basically 2 million as well, quarter over quarter.
16% year over year.
Right.
Which is lower than their other growth metrics. So they're still a little bit slow in the monthly actives.
Equity notional volumes up 35% by customers placing trades. Notional volume, so people are buying more as they're buying. Customers placing trades, same thing for options. And then crypto's up 183%, more trades, more volumes per trade. Now, April, that number is not going to be as good as it was in March because Bitcoin has taken a little bit of a breather, but we still have 2 more months left in the quarter, May and June, and we'll see how Bitcoin plays out there. Revenue per employee. So right now they have 2,228 employees. So they added about 40 people in the past 90 days, still down a lot from when they had about 2,370, 2,320 last year this time. 1.1 million per employee. It's a lean machine. It's not a frothy organization either.
Here's an interesting thing that the other brokerages either don't have or make it hard to use. 24-hour trading. They saw record overnight volume. 900 stocks and ETFs available in their 24-hour reached new highs in overnight trading volumes. Through March, customers have traded $10 billion notational volume during overnight since they launched that product.
Wow. I'm going to read this again. 900 stocks, 24-hour through March, customers trade 10 billion during the overnight session since launch. So basically in a year, I mean, that's not going away because more customers like trading at it. I mean, I bought some Palantir shares at 23.90 and I looked like a genius 2 days ago when it pumped to 25, then it fell to 21 at like 10 p.m.
I could even see a world where a Schwab customer who wants to place a trade overnight and just can't do it in their Schwab account might jump into the Robinhood account, place the trade, and then, figure out if they want to move the shares over or not.
Yeah, because when you get a good price, you get a good price. Like if you got Robinhood at 17 yesterday in the overnight markets, right now it's at 19, 13, up 7%. I mean, you're up a bit, and that's because you got it before it opened this morning.
And you got it in a time when there's less trading volume. So perhaps the stock, the prices, you might get an advantage in your favor if you're placing a trade when nobody else is trading.
That's correct.
It might also work the other way, but if you're into buying something and the price is good, it gives you an opportunity that you may not have in other brokerages.
That is correct. Dave, I have to move my computer real quick just to connect to the charger. I guess the earnings were so fire that the Mac is losing
It's just
battery.
burned your Mac right up.
It's burned my Mac right up. So while I'm doing that, can you talk a little bit about another company that I want to get your perspective on? Airbnb. You're a VC. You're in the venture capital space. I felt Airbnb made a lot of money for the VCs and didn't do as much for the shareholders. Philosophically, forget the earnings. They're down 7%.
Yeah.
Do you think this is an interesting company at all to invest
in? So Airbnb is another company that I was invested in before it went public. I
didn't know that. I didn't know you were a VC in Airbnb. Wow, that's great.
Yeah, well, I wasn't a VC, but again, I buy shares in the aftermarket. There are a few different places that will let you basically buy shares from individuals who are employees or have otherwise obtained stocks, or I've even bought shares from other earlier VC investors. I can't remember specifically where I got my Airbnb shares, but Airbnb is a company and a concept that at the time I was very, very bullish on. At this point, though, I think they kind of grew too fast and had some negative experiences. I'm not only an Airbnb investor, but also a client. And as someone who stayed in some early Airbnbs and had fantastic experiences, but as more and more houses and units became available in their platform, I had some negative experiences, and then realized that, okay, well, after cleaning fees and all this, the price of staying in an Airbnb is comparable to a hotel. And do I really want to not worry, do I want to have to make sure I bring my own shampoo and towels because I don't know the condition of the place that I'm renting? So I had some bad experiences with it as a customer right around the time when other people were experiencing the same thing. It was reflected in the stock. And at this point, I'm staying away from investing in them. I know they're in the middle of a turnaround story. They're trying to improve all of the things that all their customers seem to have experienced. They're trying to work on the cleaning fees. They're, I think, making a big push towards experiential kind of experiential experiences, as we say in the business, where you basically now are going there because it is a unique property that stands out that you wouldn't be able to do. And, they also have their guides that can give you local experiences. I'm not looking at it as an investment right now, but if they prove out their turnaround story, as a concept, I love it. I just think that there's so many moving parts that it's just not a sure thing.
Do you kind of think they have a monopoly on this industry, or are hotels still a reason they can't just use tech to avoid the housing?
I mean, they're not really a monopoly because there's Verbo as well.
That's true.
So there's a competing platform, and there's a dozen other little platforms, but the two ones you think of are those. I just think that unless you're going to an area where hotels are not available, or you're trying to get to a very specific location for a festival, or you're trying to do something that's a little bit off the grid, or you're not in a metropolitan area, or there isn't a Hilton nearby, unless there's a definite cost differential where it's cheaper to stay there, or there's an experience differential where it's something you couldn't do in a hotel, why would you risk it when you could just stay in a hotel? So I think that there's just such a kind of uphill battle against you. It has to be cheaper or substantially better at the same price. And it's hard to deliver on either of those.
Right.
Because
I agree.
cheaper is going to be a terrible experience.
Did you make a lot of money off your private shares on Airbnb or no?
Yeah, I think it was like maybe a 2x or 3x. Okay. It was not it wasn't the 10 to 100x that I like for early stage, but I was not early stage. I was kind of late early stage. I was, within 2 years of the IPO.
And I think when they did IPO, it was at a very opportunistic time. The bankers took a lot of momentum. They made a lot of money off the IPO.
Yeah.
And yeah, shareholders.
And I think that's how I was able to at least 2x my money in a short time frame. Only because they went public at the right time. It's funny because Robinhood, I'm trying to think when Robinhood went public, it was not really the right time.
Correct.
There's a few others that I was in that it's just like, why didn't we just do this 2 years ago when everything was firing for the company?
Yeah. I agree. Guys, by the way, as well, I'm going to have Vlad on the channel again for about 20 minutes tomorrow. He'll be discussing these results with me. So that'll be about 6:30 p.m. Eastern Standard, 3:30.
Such a better guest than me.
No, you're fantastic.
That's insane. That's so cool that you get to do that.
You can say what you actually feel. He's going to have to stick to a PowerPoint. You can actually, give me the emotions. So we'll see if we can get some emotions out of him. I mean, I was wondering how it would open the just how I would open the little segment we're going to do. And I think the open is going to be, holy fuck, what the fuck? Like, how this is incredible. This is absolutely incredible. How do you think he's going to be on the call, given these numbers?
I mean, I think he'll be very chill, as his normal demeanor is. I don't think he's going to be, hopefully on tomorrow's stream, you'll be able to get him to be a little more excitable about how badass everything actually is. But, these investor calls, they all have to put on their suits and act like, they're professionals. And it's earnings calls are so boring to me. But, I mean, it is the only way to get that little extra insight that you may not be able to read in their press release. And hopefully they'll, the Q&A portion will shed a little bit of insight. I think that, you've read his quotes in the press release, and he's going to say the exact same thing. And it's going to be kind of a chill, we had an amazing quarter and we see amazing momentum, and we can't give you any forward-looking statements because my attorney's sitting right next to me
with a gun to my head. I want to ask you another question, but real quick on the stock, guys. This is I remember when Robinhood reported the last quarter, Q4, and I think the stock was at 11 and it went to 13. And I saw the numbers and I was just as surprised, given my surprise was relative to the previous quarter. And I remember tweeting explicitly, guys, I don't give a fuck what happens to the stock. I'm buying more. And I did buy more when it dipped a little bit. It's like 1280 or whatever. Because I was like, I'm seeing progress. This is not like a scam that's going. I'm seeing numbers. I'm seeing the market be stupid, which happens many times. It's just if you happen to know about one of the times where it was stupid, which if you're lucky enough throughout life, you get a couple of those moments, you can make a shit ton of money. I think tomorrow, if we sell off, it's one of those opportunities where maybe we can make a shit ton of money and there's a really good dip. What are your thoughts, Dave, on someone like Vlad interacting with someone like me? I'm a retail investor. I'm a retail content creator. He did an entire podcast with me. He's going to do CNBC tomorrow, Bloomberg, all the 9 yards. And then he wants to do my channel as well. Do you think it's a good thing?
I think it's an amazing thing. I think that it shows that he's more connected than the typical CEO who does the press tour and does a CNBC interview. And, they have to do those. He's doing your show because he wants to, and he's going to reach a smaller audience than he will with CNBC, but it is the more direct connection to the audience that matters most, their actual customers, right?
Right.
Robinhood users probably, I think that Robinhood skews a little younger. They're trying to make it skew older. And by older, I mean bigger account size. But I think that by having you be the conduit that he can now talk to YouTube viewers, it just shows that either he personally or his people, his marketing, his investor relations, someone at Robinhood gets it and knows that their audience, isn't going to wake up and listen to Squawk Box or Squawk on the Street or whatever they call it these days, but they will find your video.
Yeah, I agree. And I mean, I think there's a heavy audience on Twitter. It was funny. Vlad tried to build like a finance Twitter app a long time ago, and he realized it's really hard to get people to keep engaging and using it. And so Twitter has the attention, X has the attention. Millions of people care about the stock market there. And a subset of those millions of people are willing to look at new opportunities that pop up in their feed for potentially buying a stock. And if you're active on those platforms, you could potentially get their attention as well.
And I think that by talking to you, it's also more relatable. You're asking him the same kind of hard-hitting questions that CNBC might ask, but from an like, hey, you don't have the like Wall Street pedigree. You're just a guy who wants to know, who's become interested in stocks, who's become interested in his company in particular. Yeah. And I just think that it's great that he is taking the time to do interviews with. You're probably the only one. You're the only one that I've seen. So I don't know how you got on his good side, but good for you.
And I also think it's a trend that investors are going to, CEOs are going to have to embrace at some level, dude. The JP Morgan Bank of America guy, I know you got to wine and dine him, but there's other people in the world that also have influence, and like, you got to talk to them. And I'm curious over the next 5 years, how much that changes. At what point do these CEOs reach out to the YouTubers and say, hey, can we just do a podcast?
I think that if that isn't already happening in mass, it will, because it's a new medium. It's where your audience is. And if you're trying to, I'm just like glancing over here, the retirement account transfers of $4 billion, which is 4x year to date, their retirement account holdings.
Goodness.
That audience that is growing their new retirement accounts, they're younger, they're on the platforms, they like long form content, they like podcasts, they also like short form content because their attention span, if you can then clip your interview into like 30-second clips and throw them on TikTok, that will reach a whole different audience that he's also trying to reach. And he knows that you'll do that work for him, and it's more authentic for you to do that work for him than if he were to do talk to camera stuff himself. That would just seem not authentic. That would seem scripted, or just like corporate marketing speak. But by having a real conversation with a real dude who's interested in his product and an investor in his product, and I mean, I can't think of a better way for a CEO to connect with an audience than to use you as like that conduit.
I agree. I think it makes a lot of sense, and I think we're going to see more CEOs end up doing that over the long term.
He'll never do my channel because it's called Dumb Money, and I think that there's a slight connotation that he's not really into.
Speaking of Dave's channel,
when I was watching that movie, like during the first part, I leaned over to my girlfriend and said, "This is such a good like product placement for Robinhood. Like, it's so exciting. Like, they're making finance exciting, and they keep showing the app, and this is great for them." But for some reason in my mind, I hadn't thought through, like, I lived through this, but for some reason I wasn't thinking the plot of the movie. I already know where this is going. And like, oh yeah, this is not going to end up all rosy for them. Now, if you only watch the first half of the movie, which by the way, I do make a cameo in that movie.
You do? I watched it. I'm going to watch it again to see where
watch it again, right? Kind of at the climax of the movie when they're like the social media people and the gorilla scene starts.
Yes.
Then they do a split screen with Matthew McConaughey on one side and the Dumb Money guys on the other side. So Matthew McConaughey's doing that scene.
Yeah.
I'm on screen for a full 2 seconds.
I think I actually remember it now that you're bringing it up. It's pretty damn incredible, guys. Dave right here, Dumb Money Lives. He's just speaking of his channel. He has 2 investment friends that, like, I don't know, the taglines, you took 10,000 to like 100 million or something. And like, what is this channel? Give a little pitch to what you guys do.
So Dumb Money is basically 3 dudes who like to talk about stocks. And we originally had a channel called Dumb Money, which we were talking about our startup investments. And it was kind of like a vlogging version of Shark Tank, where we would go talk to startup people and decide if we wanted to invest money in them. Then the pandemic happened, so we were not going and doing all these in-person meetings. So we just started kind of doing, we would do Zoom calls just ourselves to talk about stocks. And we're like, why don't we just put this on the internet? Because people would like to hear this. And so it kind of turned into just 3 dudes talking about stocks. We have known each other, worked together for years. We've been involved in startups together. The three of us kind of made the bulk of our money up front doing a software startup for car dealers, where it was a platform that let car dealerships list their cars online and get to places like eBay and eBay Motors and Cars Direct and cars.com and Auto Trader. And then it was a pricing tool. And then we built the websites we had their inventory, we helped them market their cars. And so we sold that to a publicly traded company. And then
did you make fuck you money on that sell?
No, I mean, it was enough to, say we don't have to work anymore. And now let's find what we want to do, because we're too young to be retired, but we wanted to, find the next entrepreneur who had the next idea. And so we kind of found companies that were similar to what we were doing, taking kind of traditionally offline industries and helping them get online. And so we did the same thing for youth athletic wear and sport team apparel. And we did, so we've been involved in several companies that we, came in, helped get everything together, and then exit the company. And so at this point, we're all retired, but just do YouTube for fun. And our real income is managing our personal money. So it's kind of just a unique insight to hear three dudes talk about what they're planning to do. We don't give advice. We're not financial advisors. We're just three dudes on the internet, but we've made money, and we're now figuring out how to invest it. And that's, our kind of strategy is, we call it social arbitrage, which is a fancy way of saying we look for trends on X and TikTok, and when we see something that's investable, we turn that into a trade.
And you kind of saw that with Robinhood to an extent in terms of the trend.
Oh, absolutely. We saw Robinhood, and that's why we got involved before it was even a public company. This is a company that is bringing investing to an entirely new audience that traditionally wouldn't think about investing. Their only exposure to investing might be if they happen to work for a big company that had a 401k, and that 401k said, okay, well, here's the 4 options of things you can invest in, pick one. And it's like, there's more to it. Anybody can do this. Anybody can invest. Anybody can make money. And really, once you get to a point, your money is going to work for you, so you don't have to do a real job, right?
Right. It's an incredible story. And I just love that story in and of itself. And now you're here trying to analyze stocks on the internet and manage your money. Robinhood up 5%, ARM down 6.5%. Duolingo, this is another one I was looking at, Dave. I don't know if you have any quick thoughts on this. We got the call in 2 minutes. This one's down 12%. Yeah,
Duolingo down 12%. I feel like the recent buzz on Duolingo seems to have kind of faded. I base everything not on what analysts say. Like, I'm not the guy listening to. I'll listen to the calls, but I'm not like dissecting the numbers. To me, investing is more of a gut feeling and more of a, do you know something that the analysts haven't yet figured out? So if you can find something that or a trend that you have discovered, or all of your friends are talking about Robinhood before the investment world discovers that everyone's talking about Robinhood. Robinhood is maybe not as good of an example because it is so visible to Wall Street. But smaller trades, a lot of trades are like retail, like fashion trends. If you can find a trending item that is going to sell in the quantity that moves the needle for the company's stock, that's the kind of trade that we like to look into.
All right, Dave, thanks so much for being with me here. I guess Robinhood actually takes a lot of questions. If you have to drop off, Dave, at any time, no worries. But if you can listen to the call, then you're free to be here for the call.
I'll listen to the call, and if I have to, I'll be here for as long as I can.
Okay, I love it. They answer a lot of questions. I think this will be like a good 45 minutes to an hour. We'll see what they say. And maybe they can say something to get the stock up a little higher. But even if they don't, I think the numbers are legit.
Yeah, I'm not worried. If the stock goes down, it's good news for me, because I feel like I don't have enough Robinhood stock.
I agree.
Are you feeling the same thing? Are you feeling like this is a stock that I have my position in, but I wish I had a little bit more?
I've got a really heavy position. So yes, I wish I have a
Well,
little bit more.
you have your
but
leaps.
I have my leap. Yeah, and I'm heavy in those. So yeah, in terms of stock, 100%. 100% would love to have more stock. Absolutely. Again,
How heavy is heavy? Like percentage of portfolio? Are you
I'm
like?
not going to say that, but it's like if this stock gets closer to the mid 20s, it's like life-changing money for me because I got in when it was $8. So
Wow.
and I'm using the leverage and volatility of options to maximize the alpha, So it'll be a very big win for me, and we'll see how it plays out. And we'll see.
That's
what happens.
fantastic. Well, I'm rooting
right.
for you. I want to see this thing at 20. Now I have a goal in my mind for you.
I love it. Call starting, guys. Here we go.
24 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during this session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. We ask that you limit yourself to one question. To withdraw your question, please press star 11 again. I would now like to turn the call over to Chris Cagle, VP of Corporate FP&A and Investor Relations. You may begin.
Thank you, Tawanda, and thank you everyone for joining Robinhood's Q1 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks, Chris. Hi, everyone. I, again, will keep my remarks short so that we can have plenty of time for questions. So just to remind everyone, Robinhood is focused on three things. Number one, winning the active trader market. Number two, increasing wallet share with our customers. And number three, expanding internationally. We believe the strategy is working and it led to strong business outcomes in Q1. First, retail trading market share. It can continue to increase in Q1, and it was really bolstered by our product innovation. As a result, year over year notional trading volumes were up significantly across equities, options, and crypto. Net deposits, they were a record $11.2 billion with strong diversity across brokerage, cash sweep, and retirement. This translates to a 44% annualized organic growth rate and continues our multi-year track record of delivering 20% plus net deposit growth. And customers are also moving their assets to Robinhood in record numbers. Q1 was the second quarter in a row we had net asset inflows from every other major brokerage, totaling nearly $3 billion, more than twice our Q4 level. I also wanted to highlight Gold subscribers. Customers are finding our Gold offerings compelling across high yield cash, retirement, margin rates, and now our Gold credit card. This led Gold subscribers to reach 1.7 million in Q1, higher than at any other point in our history. The 260,000 Gold subscribers we added in Q1 was the fastest in the past 3 years. It's also exciting to see that nearly 20% of new funded customers in Q1 subscribed to Gold, and that's more than double a year ago. Putting this all together with continued expense discipline led to record revenues of 40% year over year and record GAAP EPS of positive 18 cents. Now, what's even more exciting is that we continue to deliver amazing value to customers. And before I share more about what we're doing for our Gold customers, let's have Jason review our financial results.
Thanks, Vlad. It's good to speak with everyone today. As a reminder, last year we drove significant profitable growth with revenue up 37% and adjusted EBITDA margins expanding by 36 points. In 2024, we're focused on driving another year of profitable growth, and we had a strong Q1 with 40% year-over-year revenue growth and 14 points of margin expansion from a year ago. We also set records in Q1 for quarterly revenues, adjusted EBITDA margin, net income, and GAAP EPS. Looking more closely at our Q1 results compared to a year ago, total net revenues grew 40% to $618 million. Adjusted EBITDA more than doubled to $247 million. Incremental margins were 75%, demonstrating the scalability of our cost structure, even while we increased marketing and growth investments. And adjusted EBITDA margins expanded by 14 points to 40% as we make progress over time towards the 50% plus levels we see from incumbents. All of this led to net income of $157 million, or 18 cents of EPS. We're pleased with our results in Q1, and we aim to continue delivering profitable growth in 2024. Now let's move to our first quarter business results. Assets under custody finished Q1 at a record $130 billion, up 65% year over year. A key driver of that asset growth was strong Q1 net deposits of over $11 billion, which is more than double last year's quarterly average and translates to a 44% annualized growth rate. We're encouraged by the breadth and durability of Q1 net deposits, so let me share a little more color. First, we saw strong participation from both existing and new customers, with about 75% of net deposits coming from customers who've been at Robinhood for over a year. Second, we saw a nice mix of continued strong contributions from customers and wins versus brokerage incumbents. The mix was about 75% contributions from customers and 25% net wins from incumbents. And third, deposits into our platform were balanced across product categories. A little more than half of Q1 net deposits went to brokerage, another quarter went to cash sweep, and the last 20% to retirement. So overall, we're really pleased with the diversity of net deposits as customers engage with us across our platform. Looking at Q2, so far it's off to a good start as well, as April was our highest month of the year for net deposits, with nearly $5 billion. And with our continued progress in early May, we've already brought in more net deposits year to date than the $17 billion we did in all of 2023, with most of the year still in front of us. We're also delivering growth in Robinhood Gold. As a reminder of how Gold subscribers on average compare to our customers overall, in Q1, Gold subscribers had 8 times the average, with an average of over $40,000, grew net deposits roughly twice as fast, and had 5 times the retirement account adoption. Gold ARPU is also multiples of our average customer, which includes annualized recurring subscription revenue approaching $100 million. And in Q1, we grew Gold subscribers to 1.7 million, up 42% or 500,000 from last year. This momentum has continued into Q2 as we added another 140,000 Gold subscribers in April, more than half of our Q1 growth. Let's now turn to our financial results. In the first quarter, we generated net income of $157 million, up 5x sequentially, as we grew revenues and stayed disciplined on expenses. Looking at Q1 revenues, transaction-based revenues increased sequentially across equities, options, and crypto, and net interest revenues grew as a result of higher balances and securities lending activity. So far in Q2, we've continued to see robust trading. In April, equity notional volumes were about $70 billion. Options contracts were a monthly record of roughly $125 million, and crypto notional volumes were around $10 billion. Now let's turn to first quarter expenses. Combined adjusted OpEx and SBC was $460 million in Q1, as we stayed disciplined on expenses, even as we increased investments in marketing and growth. Looking ahead, while the year is off to a strong start, we know it's important to stay disciplined on expenses. So our full year adjusted OpEx and SBC outlook is unchanged in the range of $1.85 to $1.95 billion. Before I pass the call back to Vlad, I want to share some perspectives about our opportunity to drive profitable growth in 2024 and the years to come by growing revenues and expanding margins. First, we believe we can continue our multi-year track record of delivering 20% plus net deposit growth rates, supported by a young customer base gaining share of global wealth, share gains in existing markets, and expansion into new markets and product categories that give us more opportunity for growth. Second, as customer assets grow over time, we believe this will drive strong revenue growth as well. We're naturally hedged between interest rates and trading, and we continue to diversify our business as we introduce new products and enter new markets. And third, we're a technology company and a highly scalable platform with about 90% fixed costs. So as our revenues increase, we believe we can drive significant margin expansion and free cash flow. In closing, we had a strong Q1, and we have a lot of momentum to start the second quarter. We remain focused on driving profitable growth for shareholders as we work to maximize EPS and free cash flow per share in 2024 and the years to come. Now I'll turn the call back to Vlad.
Thanks, Jason. As I said earlier, the second part of our strategy is increasing wallet share with customers, including growing Robinhood Gold subscriptions, which hit an all-time high of 1.7 million in Q1. In March, we held Robinhood's first ever keynote event to introduce even more value that we're providing Gold customers, including an all-new customizable app experience, a 1% unlimited deposit boost for Gold customers that's launching soon, and a brand new Robinhood Gold credit card with 3% back on all purchases. We're seeing lots of commentary about how amazing of a deal Gold is, and we're happy customers are recognizing that and starting to spread the word. Over 1 million people have signed up for the Gold card waitlist, only half of which are Gold subscribers today. So we believe we can substantially grow Gold adoption as we roll out the card. We love seeing the progress we're making, attracting, retaining, and expanding Gold customer relationships on the journey to be the most trusted, lowest cost, and most culturally relevant money app worldwide. I want to thank our customers for continuing to trust and advocate for the platform as we make progress on our mission to democratize finance for all. The business is in a great position because of you, and we're just getting started. And you should know our team has been working incredibly hard to deliver even more value to you. The roadmap is full. There's so much to do. And now let's move on to questions.
All right. Thank you, Vlad. For the Q&A session, we'll start by answering the top few shareholder questions from Say Technologies, ranked by number of votes. We passed over questions that we had already addressed on this call or in prior quarters and grouped together questions that shared a common theme.
I'm surprised I don't have you asking questions.
We'll turn to live questions from our analysts. So we'll kick it off with our first question from Say. Alexander M. asks, what impact will the SEC Wells notice have on the business? Jason, do you want to start on that one?
Yeah, I'll maybe start and then Vlad can add some thoughts. First, for our customers, your accounts are not affected by this. It's business as usual for Robinhood Crypto. We're, of course, disappointed to have received the notice. As you know, we've operated our crypto business in good faith. We've been very conservative in our approach in terms of coins listed and services offered. And we're a highly regulated company and have applied the same legal and compliance standards we use for our brokerage to the way we run our crypto business. So it's disappointing to see more regulation by enforcement here. Vlad?
Yeah, I mean, echoing Jason, this is a disappointing development. We firmly believe U.S. consumers should have access to this asset class. They deserve to be on equal footing with people all over the world. And at the end of the day, we're going to defend the firm and continue to advocate for our customers.
Right. Thank you. The next question is from Joseph C., who asks, when are the new credit cards getting fully released? Seems that many are still on the waiting list. Vlad, do you want to start that one?
Yeah, I'll take that one. Thanks for the question. First of all, we're really excited about the Gold Card and the value that we're going to be providing to customers. We've seen a ton of demand. I mentioned earlier, over 1 million customers have signed up for the wait list so far. And the product's looking great. You might have noticed we've dropped the credit card app on the App Store, and we've rolled it out to the first customers outside of the company. As we think about this rollout, we really want to balance the desire to get the card to customers as quickly as we can with making sure that we're managing risk to the capital well as we enter a new market for us. So we're starting with an initial group in the tens of thousands of customers over the next few weeks, and then we're going to observe them carefully, look at the data, watch the spending activity and the borrowing activity, and we're going to use that information to inform the broader rollout of the card. We really want to make sure that we're being very, very prudent as we do this rollout, since this is a new business line for the company.
Great. Thank you, Vlad. And then the third question from Say is from Daniel R., who asks, 24-hour market was halted. How can we trust that the platform, when markets become volatile, what steps are being implemented to handle future volatility?
Big question.
Well, first, it's really been awesome to see how much interest there is in our 24-hour market offering. Over 10 billion in volumes have transacted in the overnight session since it launched a year ago. And we now offer overnight trading in over 900 names. And really, this is one of the core differentiators of Robinhood. You don't find this type of offering elsewhere easily. As for why trading was affected, so in order to facilitate these trades, we route to a third-party ATS. The ATS we use went down for the evening. This affected us, but also other firms that route to it. But the ATS was able to support trading again in a handful of hours. Looking ahead, we're really on the frontier with this offering, but as we continue to invest in it, the offering will improve over time and it'll get more resilient. So believe us when we say that we're committed to making sure this offering is reliable and more feature-rich going forward.
Good fucking answer.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking the time to ask these questions of Vlad and Jason and look forward to more next quarter. Now I'll turn the call over to Wanda to lead Q&A from our analysts.
Thank you. Ladies and gentlemen, as a reminder to ask the question, please press star 11 on your telephone and then wait to hear your name announced. Limit yourself to one question, and then you may jump back into the queue. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from the line of Devin Ryan with Citizens JMP. Your line is open.
Hey, thanks so much. Hi, Vlad. Hi, Jason. How are you?
Hey, Devin.
I want to ask a question on the growth in new deposits. I mean, just really impressive momentum there, and good to hear second quarter is accelerating further. And it feels like you're just scratching the surface on Gold adoption, I think, Vlad, as you talked about. And I also think the offering really stands out in the market. So, with that said, I heard Jason's comments on better ARPU for Gold customers, but is it possible to kind of simplistically unpack the economics you're expecting on new deposits coming in to a Gold connected account under these new promotions relative to deposits that aren't, or even kind of like revenue per asset under kind of the model prior to these promotions? I'm just trying to think about the economics of the net of dollars coming in, because it seems like you're seeing a really nice acceleration there. Thank you.
Yeah, thanks, Devin. It's Jason. I'll go ahead and take that. So in short, we love the economics of the match promotions that we've been running. I think I said last quarter that the payback on the 1% match is a little under a year, and on the 3% match, it's between 2 and 3 years. And we're watching that closely, kind of on a monthly cohort basis with our customers. We're seeing the 2023 cohorts already paying off, and 2024 is off to a great start. We mentioned on our prepared remarks too that the strength of net deposits, 44% annualized growth rate, is really well diversified between customers that have been at the company or been at Robinhood for over a year, representing 75% of those net deposits. And we're also seeing that 75%, cut a different way, are unrelated to the promotion. So really strong promotion response, but it's only a small part of the strength of the overall deposits for the quarter.
Thank you. Please stand by for our next question. Our next question comes from the line of Dan Dolev with Mizuho. Your line is open.
Hey guys, thank you for taking my question. Great results out there. Really, really nice.
Thanks, Dan.
Okay.
Of course. Yeah, so you mentioned some really strong numbers in April, really strong momentum. Can you maybe elaborate a little more regarding the momentum that you're seeing heading into the second quarter? Any color and additional views on the momentum would be greatly appreciated. Thank you.
Yeah, absolutely, Dan. I mean, so we're seeing strong trading across equities, options, and crypto, continuing into the next quarter. We're seeing strength kind of across the business as well in terms of new gold subscribers. We mentioned, and you mentioned, the strength in net deposits, nearly $5 billion. So we're really seeing great diversity of the strength. Retirement assets are now crossing over $7 billion, which is just remarkable growth, and we love to see our customers saving for the long term with us. We're going to share our metrics, I think, next week on the month of April, and so you'll get a fuller picture there. But it's really across the board, whether it's sec lending or trading or net deposits.
Yeah, and I would just add, we're of course excited about the Q1 performance and the start to Q2. But I think we have some medium and longer term tailwinds to the business. The gold benefits that we announced in March, including the 1% deposit match, which really has resonated quite strongly with customers based on early feedback, has yet to launch. We're entering a new product category with the credit card. And we've also been working on our futures and Web Pro product for active traders. And we here get an early look at the products that we're building, and the teams have been working incredibly hard to make what we believe are incredibly polished products that we're very excited about. So I think we tend to get excited about things on a quarterly basis, but we're running this business for the long term, and I think that you'll see a lot more from us.
Thank you. Please stand by for our next question. Our next question comes from the line of Steven Chubak with Wolfe Research. Your line is open.
Hi, good afternoon, Vlad. Good afternoon, Jason.
Hello. Hey, Steven.
Yeah, so I wanted to start off with a question just on the incremental margin ex SBC coming in at 75%. Certainly a good outcome. As we think about the incremental profitability as the business scales, is that 75% bogey a reasonable expectation for investors to underwrite? And just trying to gauge whether there's room for even further operating leverage or upside, given the marketing spend was actually relatively elevated in the quarter as well.
Yeah, thanks for the question. So we're not providing guidance necessarily on incremental margins. What I tell you is, as I've said in previous sessions, that about 90% of our cost structure is fixed, meaning that 10% of our costs kind of are variable relative to the activity of our platform. So that gives us a lot of opportunity to drop incremental revenue to the bottom line. You're seeing us this year make a really big step up in marketing. About $100 million year over year is our plan to spend in marketing versus last year. And as Vlad was touching on in the last question, we're making a lot of investments and not sitting still. And even with all this step up in marketing and investments for growth, we're delivering, incremental margins at 75%. So we feel really good about that. We're going to continue to watch our costs. Excited to see revenue per employee cross over 1 million. I think that there's a lot of opportunity to expand margins going forward.
Thank you. Please stand by for our next question. Our next question comes from the line of Kyle Voigt with KBW. Your line is open.
Hi, good evening. Thanks for taking my question. Maybe just a question on the Gold Card. Obviously, the offering is very compelling and great to see the demand with the wait list at over 1 million users already. But just wondering if you could expand upon the expected economics a bit. You've noted the $300 ARPU previously, but that was for X1 with a relatively small subset of users that you ultimately ramp to with this offering. And just given how attractive the card might be for some more, transactor types, and those don't carry a balance, are you still confident in your ability to profitably monetize a broad range of potential new clients? And then if I just add a second part of that question, can you give us any flavor on what you might expect on the transaction revenue side for the offering specifically? I'm assuming maybe some level of headwind after netting out interchange and rewards, but wondering if you can kind of frame that. Thank you.
Good question.
Yeah, thanks, Kyle, for the questions. Jason, I'll go ahead and take that. The first point I'd make on the credit card is that we think it's really strategically aligned with, our vision that we want to serve all of our customers' assets and process all of their financial transactions. And having a great value credit card, I think, is really fundamental to that vision. That said, we need to do this in a prudent way and in a way that makes sense economically for the company. And on that point, I think that we've got a few things that are going to benefit us. First of all, we're going to be able to leverage our scale. We're seeing that already play out with a low CAC. We have over 1 million customers on the wait list with essentially no marketing dollars against that. And when you look at competitors, they're spending several $100s, perhaps $500 per customer to acquire a customer. And so we really love the low CAC opportunity that leverages our platform. We're also able, versus X1, to get even better economics. And for example, cost of funds, we've already been able to improve by over 300 basis points because of our strong balance sheet and because of our strength in the financial results. And so those are a couple of areas that I'd point out. And then thirdly, I'd say that we have an opportunity to benefit because of our deeper relationship with customers. It's going to help us understand better the customers that we are underwriting and make better decisions. And over time, have an opportunity to offer collateralized cards, which would also help with our economics. As Vlad, I just finished with, as Vlad pointed out, we're going to be really careful and prudent here. We're rolling it out to tens of thousands of customers, and we're going to take months to look at how our customers are responding, how they're using the card, their borrowing and repayment activity, and we're going to use that to inform our broader rollout. And the last point I would make is 2/3 of our customers are prime or higher in terms of credit rating, and so we do have a high quality customer base. And so together with the prudent rollout and the high quality customers, and benefiting from our scale and our deeper relationships with customers, we think we can land a good economic outcome for Robinhood.
Thank you. Please stand by for our next question. Our next question comes from the line of Mike Cyprys with Morgan Stanley. Your line is open.
Hey, good evening. Thanks for taking the question. Just wanted to ask about capital allocation. Hoping you could update us just around your latest thoughts there with $5 billion of balance sheet cash and investments. Just curious how you're thinking about the appetite for dividends, buybacks, M&A, where M&A could be most additive at this point, given you just added on the card platform side. And then just on M&A, maybe just remind us of your hurdle rates and criteria there. Thank you.
Yeah, thanks, Mike. We love the strong balance sheet, over $5 billion of corporate cash. Three ways to use the capital to the benefit of shareholders. One is just investing in our business for organic growth, and you're seeing us do that with their incremental investments for growth, including the $100 million step up in marketing this year. The second is M&A. You've seen us recently acquire X1. We have a very active corp dev team, and we're looking at several opportunities there that can either augment our team, the talent of our team, or accelerate our product roadmap. And nothing to announce, but the team is certainly active. And then the last category is returning capital to shareholders. You saw us do that last year in the third quarter, about $600 million to purchase 5% of our outstanding shares. And so, we're deploying capital kind of across all three. In terms of, hurdle rates, you'd expect us to use our cost of capital at least, and we're mindful of that. And nothing further to update you now on capital allocation. It's something that we're kind of constantly looking at.
Thank you. Please stand by for our next question. Our next question comes from the line of John Todaro with Needham & Company. Your line is open.
Hey, great. Thanks for taking my question. And yeah, great results here. I guess we're just trying to understand of course, the crypto side of the business post the Wells notice, and just kind of get a little bit more color on where you're thinking at. And I guess in particular, if you look at it and you go, hey, we're kind of almost being treated the same way as Coinbase, does it start to make sense where you look at more broader listings because you guys have been fairly conservative on that front, or is that not really a fair way to think about it?
Yeah, I think you're right in that we've been extremely selective about the assets that we offer on the platform. I mentioned in the prepared remarks that we have seen increases in volumes and in market share on the crypto side. I think for a long time, we were offering customers great pricing on purchasing crypto assets, but we weren't doing a great job of communicating it. And now we are communicating it through the user interface and through all sorts of marketing surfaces. And I think customers are starting to pick up on that fact. You're seeing it talked about more in social media, just how great of a deal they're getting on crypto transactions. And we're expanding in the EU, where we, again, believe that we can provide great service and great offerings to customers. So the crypto team's been working tremendously hard. The roadmap there is quite full. There's a lot to do to make the product experience better for customers.
And I would just add that, we've been incredibly selective in the coins that we've listed, and are confident that the coin selection does not include any that are securities. And we continue to apply that high standard on anything that we would list on our platform.
Thank you. Please stand by for our next question. Our next question comes from the line of Brian Bedell with Deutsche Bank. Your line is open.
Oh, great. Thanks. Good evening. Maybe just staying on the crypto theme, maybe Vlad and Jason, if you can talk about just the nature of the surge in crypto volumes in March. And I think you said April was at 10 billion. Appreciate, of course, this is very volatile class, but maybe if you can just talk about what you're seeing, that drove that heavy activity in March, and whether you think we could see spikes like that again, and then just the mix of crypto volumes between the EU and US is maybe the EU is still very small, but just trying to get a sense of that.
Yeah, I mean, in terms of what drives crypto volumes, I think modulo our market share gains, our crypto activity does track the broader market, and I don't really want to get into prognosticating what the crypto market is going to do. That's obviously a difficult thing for anyone to do. It's a global market. There have been ETFs approved, as you all know. And that's why we look at market share and how we're doing relative to peers, because markets go up and down. But if our market share is growing throughout all conditions, then over the long run, we'll do very, very well on that side of the business. And that's kind of our approach across all of the asset classes for the active trader business. But the goal is also to diversify the business so that we're sort of like less reliant on volumes anywhere in any one category to drive business results. I think that's kind of what you're starting to see in this quarter's results is really the performance of the company across all asset classes and even across wallet share with the net deposit growth numbers.
In terms of the mix element of your question on Europe, you're right. It's still a relatively modest contribution. The lion's share came from our U.S. crypto business, but we like what we're seeing and tens of thousands of customers there. So we'll continue investing there.
Thank you. Please stand by for our next question. Our next question comes from the line of Patrick Moley with Piper Sandler. Your line is open.
Yes, good evening. Thanks for taking the question. So I just had one on index options. I see it's referenced in the deck, but I didn't hear it mentioned in the prepared remarks. So are you still planning to roll out index options later this year? And then just on the economics, it's my understanding that index options are much less profitable for the brokers than multi-listed options are. So just curious if, what your expectations are around how much of your current options trading could be cannibalized by index options. And if you do, or when you do roll it out, have you given any thought to potentially charging a commission on index options? Thanks.
Yeah. So we have announced that we're going to be launching index options. This is part of the overall goal of giving our active traders access to the best tools and the best value for their services. So index options are coming in Q4. We'll also be launching futures, as we've mentioned in the past. And as with any new Robinhood product, there's two areas where we'd like to stand out in the broader marketplace. One is the user experience. We want to make sure that our tools are easy for active traders to use, particularly on mobile, but also on web with the new offering that's coming there. And then economics. So, the economics we intend to make very, very competitive, but also profitable for the company on a segment basis. So, Jason, I don't know if you want to add anything more specific there.
Yeah, we're still working with the team on the pricing structure for index options, so we'll have to stay tuned there. But agree with Vlad that we want it to be a great value for customers and also make a lot of sense for us economically.
And we should note, index options trade round the clock, which is one of the reasons why they become so popular. So we don't anticipate seeing a ton of cannibalization there.
Thank you. Please stand by for our next question. Our next question comes from the line of Matthew O'Neill with FT Partners. Your line is open.
Yes, hi guys. Thanks so much for taking my question. A lot of good ones asked and answered already. I was wondering though, since we are seeing such a clear inflection point in the MAUs, and you gave some incremental details around the growth there from the card, both gold and non-gold, sounds like 500,000 each. Could you help parse maybe the rest of the monthly active user growth, even just anecdotally, like more crypto focused or more options and equity focused? Thanks.
Yeah, absolutely. There is an impact to MAUs when crypto interest surges, and we saw that in the quarter, and so that's certainly a part of it. But when I look at the activity across the quarter, it was very broad-based. Equities, up, options activity up, certainly crypto, retirement, gold members, net deposits, and so we really saw an overall lift that was reflected in the engagement numbers that you're seeing.
Great, thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Ken Worthington with J.P. Morgan. Your line is open.
Hi, good afternoon. Thanks for taking the question. When we look at your
Hey, Ken.
promotions, hi. When we look at your promotions, they seem focused on gathering additional customer assets. Do you think such asset-focused promotions could endure over the intermediate term or even longer term as a business strategy? Any reasons why the competition might not either be able to or just might not follow you with promotions of their own? And as we think about, other behaviors you want to target, are there others that promotions might make sense for you to target at some point in the future?
Yeah, I can start with that. I think the first thing I should note is we've invested in building a strong data science and product analytics capability from inception in the company, and I think that's starting to become a key differentiator now that AI is becoming more and more important, and now that we've started running these promotions. We look at it very closely. We can track them all sorts of ways across cohorts and different types of customer behavior. And we like what we're seeing. I think Jason mentioned earlier in the call that for the 1% matches, we've been targeting a sub 1 year payback, and that's between 2 and 3 years for the 3% promotions. And the cohorts from 2023 have already paid back, with 2024 looking good as well. So we feel really good about the offering, and you should see more creativity from the team going forward. I don't think that we've fully excavated what we can do with this capability that we've built.
Yeah, Ken, we love that we're taking share. We love that we're winning assets against the incumbents. And in terms of your question about how durable it is in the medium to longer term, I don't see any reason with our highly scalable platform that we can't continue to offer promotions like that, especially with the attractive paybacks that we're realizing. On your question about whether it's something that could be copied by competitors, I think we could all come up with a handful of reasons why it would be challenging for them, whether it's their cost structure or just their installed base, and defending that through a promotion like that. But we love the promotions here at Robinhood, and again, we like that we're taking share.
Thank you. Please stand by for our next question. Our next question comes from the line of Benjamin Budish with Barclays. Your line is open.
Hi, good evening, and thanks for taking the question. Just on the topic of competition, you highlighted that 25% of net transfers came from other brokerages. Can you just talk about this customer cohort? How do they compare to your pre-existing customer base? Are they coming? Are you seeing any behaviors? Are they coming for the high savings rate? Are they coming for the deposit bonus? Are they active traders? Are they engaging in crypto? Any kind of characteristics of this cohort? Are they similar, different from sort of the existing customer base? Thank you.
They're probably more similar than different. One of the things that I'd highlight is they're coming in with average balances that are much higher than our typical historical customer. So loving the quality of the assets being brought and the activity of the customers, and it's really reflected too in the comments that we're making about payback periods on these promotions, that we are seeing customers engage with our products in a way that generates revenue for us.
Thank you. I'm showing no further questions in the queue. I would now like to turn the call back over to Vlad for closing remarks.
Thank you guys for all the questions. And look, we love the quarter. We love where the business is heading. I think that long term, we're really positioning Robinhood to be a generational company that will benefit from a generational wealth transfer that is only starting now, from older generations to Gen X and millennials. And the goal over the long run is for all of our customers, all of their assets should be custodied at Robinhood, and all of their financial transactions should go through Robinhood. And I think you're starting to see us make significant progress towards that. So thank you for being with us on the call and on the journey.
Ladies and gentlemen, this concludes today's.
All right. We'll be on for like 10, 15 minutes, guys, just to break all of that down. I've got a lot to say. Dave, what were your raw thoughts about this?
So they hit on pretty much all of the questions that we kind of talked about earlier. We got to hear a little about the gold card economics. We got to hear about the economics of their promotions. We got to hear about some of the concerns over that 24-hour market halts and things like that. I feel like they're really good at answering questions. I didn't hear anything that was overly surprising to me. Nothing to announce as far as like a dividend or a buyback. But they are increasing their marketing. They're returning value to shareholders by doing buybacks. I think that, we again heard the million plus people on the wait list for the credit card, and got a little bit more clarity that they're going to start rolling that out to tens of thousands over the coming weeks.
Do you think they're strategically being conservative, given you know a lot about cards, on rolling that out?
I think they're doing exactly what they need to do. Although, it's a card issued through a bank that isn't them. So, right. They're taking on more limited risk when it comes to balances and that sort of thing. It's kind of like the perfect agreement for them. They get, most of the upside and very limited downside risk. But when you're rolling out a new platform and a brand new app and all of that, you always want to be a little cautious, because, on day one, if they were to have 1 million people running cards and everybody's getting declined, that's a bad experience for the user, and not something that they're going to want to go through.
Right.
But for me, I've been using the card, or I've had the card and been able to use it for months now. The app is rock solid. I had the beta app before it was on the App Store. It was the only way to log into my account. And it's a slick app. It's going to be rock solid because it's the same team that did X1, and it's a very similar app. The features are very similar. It's just kind of a new skin on a lot of the existing technology that they'd already perfected.
Any concern, real quick, about the app not being into the Robinhood app, or do you like that they're two separate apps? Or would you?
That was my first question to the X1 team, and I kind of get it. There's so much in the credit card app. It's 4 tabs of its own, and the Robinhood app is already so cluttered. I wouldn't be surprised if in the future, after, Robinhood right now is in the middle of redesigning their primary app and rolling out a credit card app, and just doing that at the same time, just from a development standpoint. As a product guy, I know that would be a big headache, because they're gonna roll out the credit card before they roll out or it gives them the flexibility to roll out one before the other.
Right.
It would be nice to have it all in one place, but knowing how the credit card app works and being able to create a virtual card and cancel those virtual cards, and have your cash move from the app to the thing, and like all of the things that are so credit card specific, it makes sense that it's in its own app. I wouldn't be surprised though if in the future they did roll it all into one, because it is kind of clunky having 2 apps.
Right. Yeah, I think that makes a lot of sense. Guys, I think it was a pretty good quarter. A couple stats I got from the earnings call. Number one, 2 things some people might have missed. They did 140,000 new gold members in April alone. They did 260 grand in all of Q1, which means the first month of Q2. And this points to the momentum not slowing down. It doesn't seem like it's a one-off quarter. They've already done 50% of all the gold in April, which is 3 months, half of 3 months worth of work in 1 month. So that's pretty incredible. That means gold subscriptions seem to be going higher and will continue to go higher. Another big thing I saw right here is they did 2 things. Retirement assets now $7 billion. Flats at $6 billion in April. Looks like May they got another $1 billion that came in, or within the first couple of weeks of May they got another $1 billion. So that seems to be heading in the right direction. And then this one was huge. They added $5 billion in Q2 already. That's been about 35 days, which means if last month was 11 billion, they just did 5 billion. That's almost 50% of last quarter's deposits in the first month of Q2. Ironically, they did the exact same thing last quarter. Last quarter, they did 1.5 billion, which was 50% of Q4's deposits, all in the first month of Q1. And they're duplicating that into Q2, which is showing me a compounded type of growth that is growth that I haven't really seen before in a fintech product. like I'm seeing this in Robinhood. Any thoughts on deposits, Dave, and what they said in the call?
Yeah, and in addition to deposits, I thought it was interesting that they revealed they had, and they're already giving us numbers for Q2, or we're well into Q2, and for them to go ahead and share that, they now have more new accounts opened year to date in 2024, up through May 8th, than they did in all of 2023.
Wow.
So we're just it just tells you we're trending ahead on new accounts, on assets under management, on deposits, like all of these metrics. And I think that's kind of what I like the best. Is not one area is just killing it, but everything is kind of working together.
What did you think about their answer to the 24-hour markets being halted? And what was your initial reaction when it got halted a couple weeks ago?
So I was watching it in real time. I wasn't trying to trade, but I saw someone on Twitter say it's halted, and I'm like, is that true? And I went in, and it was still showing me that it was open, and then it was halted for me. So it seemed to be kind of like almost a rolling blackout.
Yeah.
Their answer, they basically said that the trades are routed through a third party. Much of what Robinhood is a marketing. I think Robinhood is a marketing company, a technology company, and then a platform to talk to other APIs and other people doing stuff. And so the fact that they are using a single third party for 24-hour trading, and that they were able to recover within a few hours, that's kind of the answer you would expect. But I think that is the eye opener for them. Like, well, maybe we need to have, and even Vlad said that they're going to get more resilient over time. To me, the only way to get more resilient is to have more third parties that are doing the same thing. It's not like they're going to open up their own trading desk for after hours, but having other third parties that they can rely on. And if one goes down, volume gets shifted over to another. And again, they repeated that 10 billion in volume so far this in the past year since they introduced that 24-hour trading. Seems for what it is, a robust platform that is only going to get better. And I think that they answered the question perfectly.
Yeah, I agree. And I think that answer was much needed, because I know the perception of it definitely looked bad, right? That they were doing the same thing they did before. But because I also understand a little bit deeper, the company, guys, I believe is called Blue Ocean. That company shut down for IBKR as well for a bit. And so no one could do it. And you couldn't go to Fidelity to sell your Tesla at that moment because Fidelity doesn't allow it. So I think Vlad's response was the right response. Is like, hey, this needs to be better, and we're going to look to make it better. And I have no doubt in my mind that they're definitely going to try to make it as good as they can, but they're the only ones that really offer it. Let's end off here with crypto. 128 million in profits. One of the analysts had a really good question. It was just like, look, it seems like crypto was the surge. What happens if crypto kind of falls off a bit? How do you think they handled that analysis, and what were your thoughts on their crypto trading overall?
I thought they handled that well too. Crypto is what it is. As people get excited about crypto, they're going to do more volume in crypto. It's unpredictable. It's something that is kind of a market risk for them, but I think the answer that they gave was there is a broad-based overall lift among all the stuff we do. And they listed equities, options, deposits, gold subscriptions, everything they do, all was headed up. And so while crypto was a outsized kind of gain, all the bars in that graph you're showing got bigger. Crypto just got bigger because crypto was hot again. And if crypto cools off and that bar isn't as big, I still, as long as everything else is continuing to grow, especially with more accounts and more interest revenue for them, it doesn't worry me. And I thought that it was pretty clear. And, I think that question came as a part of monthly active user question. And as the monthly actives continue to grow, and I was just trying to get a little competitive data on monthly assets and accounts under, so Vanguard, Schwab, and Fidelity are so much bigger than Robinhood from an asset under management. It's like 8 trillion for Schwab versus 0.9 trillion, 0.9 trillion in 2023 for Robinhood. But if you look at the account size or the number of accounts, it's
not that far off.
Robinhood has 23 million active accounts as of Q3 23 compared to Schwab's 34 million. Schwab grew 1% from Q3 22 to Q3 23, Robinhood grew 91%.
Yeah.
So it's kind of what I was saying. The ability for Robinhood to gain new customers is much easier for Robinhood than for Schwab.
I agree. And that's that right there. I remember looking at those stats a couple months ago as well. And that's where I was also realizing they don't need to get the whole market. They just need a tiny slice for this stock to be a little higher than it is right now. Speaking of the stock,
we saw it sell off a little bit in the after hours, but it,
yeah. Let's end off on there. Can you walk me through the psychology of this? You've been an investor for a very long time. Guys, I'm going to put Dave's YouTube channel in the chat. Please make sure you check him out and subscribe as well. You've been through these cycles up and down in the private markets, public markets, amazing results, stocks really barely up. A lot of people are disappointed. What advice would you give to people psychologically thinking about a slight green bar or even a sell-off tomorrow if we see that?
Just keep your heads up. I would love to see a sell-off, because if you're like me, you're probably thinking these were good results. I think they're only getting stronger. I think this is a company that I want to be in, not for the day or week, but for the year or decade. I wouldn't be surprised if they close the year out at a way, like if it were to drop tomorrow because somebody got worried about something, or, Jay Powell got on TV and, was hinted that, he might be higher for longer or getting higher, or, something happened that made the stock sell off. It would just be a buying opportunity. And really, I think that like we've kind of touched on earlier, this stock is affected by not just the performance of the company, but also by the performance of the overall stock market and the crypto market. It's almost like buying a weird ETF that is the VOO and some kind of a crypto index and a bank / brokerage / crypto house all rolled into one.
Yes, and that is the risk to Robinhood. One thing I do like about them is that this gold subscription is reaching $100 million ARR. That's independent of the market. The growth is dependent on the market, but that revenue is relatively sticky. Deposits deposits dropped off to like $2 billion in the bear market in 2022. We just had $11 billion. If we get another bear market, what if the drop off is $5 billion? That's the average, right? Which is substantially higher than it was in 2022. So I think the company is evolving to try to create products and services that are not as dependent on the market, but it's 99% right now dependent on the market.
And I thought that they answered the questions about the promotions, which sound very expensive up front. But as I was saying, it's a marketing expense. It's a short-term expense. They get their payback on those 1%ers in less than a year. In the 3% matches, they're getting that in 2 to 3 years. They're already seeing the payback. It's already paid for itself for the early cohort in 2023.
Yeah, I'm going to nerd out and listen to this again because there were a couple of questions about specifically cohort analysis around deposits. And I think Jason Warnick, the CFO, answered it just like you said. He's like, hey, it's a marketing expense. We figure out how to do it. They keep depositing more so we can keep affording to do this. And
I don't think they technically called it a marketing expense.
Right.
That's my language. It is an upfront cost of doing business that pays off in the long run. And to me, that sounds like marketing.
Correct.
But technically, don't ask Vlad that tomorrow because he might say, no, it's not marketing. It's a customer acquisition cost though. That's what you call it. And I really liked how they answered all of that, the leveraging scale and having their low cost of acquisition, getting 1 million signups on their gold card, which means you have all of those people who are either about to will activate gold or have already activated gold. Just to get the credit card. If let's say that 1 million turns into 500,000 credit card signups, that's 500,000 people paying for gold all of a sudden.
And he said we didn't spend anything on marketing to get that.
Nothing. No, they didn't need to. They did one event. They did your podcast, and that's about it. They sent me one. Between you and I, we've probably sent more customers their way than any marketing dollars they could have spent, and we do it for free.
I agree. This was awesome, Dave. Thank you so much for breaking this down with me. For those, again, that don't know Dave, you can go back to the earlier part of the call where we talk about his background, but he is an absolute legend in the investing community. He has this awesome YouTube channel, and I really appreciate you breaking this down with me because you've been in the Robinhood saga for almost a decade now, so it's awesome to see.
This is fun to do. Invite me back for any of my other favorite stocks, Tesla, Amazon, Apple, just Let's do this again. It was fun.
Let's do it again. Thank you, everybody. It means the world. I'll have Vlad on Thursday, which is tomorrow at 6:30 p.m. Eastern Standard Time to discuss earnings, and we'll keep going from there. Have a good one, guys. Good night.